Hey everyone, welcome, good evening. Welcome to Under Twitter Spaces with me, Kalu Aja. This is our podcast where we talk about all things money, personal finance, the economy, and how all those big economic topics affect your personal wallet. This is Money Spaces, and again, thanks for hanging out with us on this Sunday evening, 7 p.m. West African time. Let me set the stage for us today. We've had the Naira, should we say, Naira, what's the word to use now? The subsidy on the dollar has been removed, right? So now we have the Naira free floating in quote, which means we no longer have a CBN, a Central Bank of Nigeria rate for the United States dollars. If you want to buy the dollar, you'd have to be a willing buyer, willing seller. You'd go to your bank and you then basically buy dollars, which means it's going to be at currently at about eight. I would say 810 or 790, something like that. So what has that meant to the Nigerian economy? If you are an importer, you've got to pay higher for your import because the dollar now costs you more. So if you are importing, if you are Nestle and you are importing, say, cereals or whatever, you have to pay more for those cereals because you need more dollars or you need more Naira to buy the same amount of dollars that you're using before. But if you are a bank and the bank, you have, say, $1 million in your offshore account, say, in Bank of America, that $1 million instantly went from being valued at say 500 naira to being valued at 800 naira just in the blink of an eye. So the banks are making money, or should we say their assets have been revalued, thus their balance sheet looks a lot better. Their returns look a lot better because of their revaluation component that is part of how they report, right? But if you are an importer, you import for export or you import for use, your costs have gone up. Your revenues might go up, but your costs have gone up. Same with Nigeria. If you look at the last FARC that was shared, that's the federal allocations that goes from the federation to the federal, states, and local governments. We had the record, give or take about $1 trillion or so that was approved to be shared. Out of that trillion, right, the bulk of that trillion, about 320 billion, came just from revaluation reserve, which meant that Nigeria, we used to share the dollar at about 500, 438, whatever the NAFEX rate was. Now we share the same dollar, but now at the market rate. So the states and the federal and local governments got much more simply because the Naira is now being shared from the NNPC to the FARC and taken in as at that price, the market price. So it's changed, do we say, if you look at the stock market last month and this month, it's changed a lot of things, right? And that's what we want to talk about today. What has been that impact? I want to go really deep into that. What's the impact? Let's look at the banks. Let's look at specifically the fast moving consumer goods in Nigeria. That's what we want to dive in today. So I've got Olumide here with me, and I've seen some of my guys already on the screen. I'm going to call on to speak and just to give us more headlines. Well, Olumide is here with me. Olumide, hi, what's up, man? You dropped off a bit, now you're back on. How you doing?
Yeah, I'm fine. Thanks for having me, Carlo, with the network. Interesting. Going to be an interesting discussion. This week had been one of the strangest any results we've seen in recent memory.
That is true. Well, let's jump right into it. Just give us your overview, right? The overview, I've set it up. We have the Nigerian stock market. We have, should we say, the financial sector. Or let's make it this way. Let's say the holders of FX are making money, but the users of FX are losing money. That's a simple way of putting it. What's your take overall of just the total market vis-a-vis what the revaluation of the Naira versus the dollar has done to the markets? Give us your overall take.
Yeah, it's been, from an investor's perspective, it's been an uptick in the market, particularly if you look at the banking and energy stocks, because you understand the fact that one of the limitations across the NGX had been the fact that foreign portfolio investors has seen the market as very inefficient. That's because the dollar has been subsidized and by the CBN, and it's almost impossible for them to get their funds out, and bringing the funds at that rate, it wasn't really reality. At that time, the CBN was around 400, and fast forward, the market had preempted that the fact that the three candidates prior to the election were pro-market driven. They spoke about the fact that they were in line with the liberation of the FX market, reforms across the energy space, and things like that. So, President Tinubu came on board and took the bull by the horn, and we saw upticks, particularly in the energy market and the banking stocks. But, it's been very exciting, particularly in those sectors. But if you look at the year-to-date of banking stocks, for example, before the sell-offs we saw this week, the banking index had a year-to-date gain of about 69%. That means the average banking stock was giving that kind of return. So the last time we saw that was during the NDD case time. So it was really a very exciting moment for a lot of retail investors that had position in those banks. Energy stocks, to interestingly remove our subsidy, push things up. But the pain in the room was consumer goods. We saw that even while, despite other sectors were really rallying, consumer goods were just on the side. We just saw really upsides from big players like Nestle came up to break the 1,250 mark, looking like it was going to approach the 1,415, but it stayed for a while until the big results start coming in. And I think the first result that cracked everybody was Cadbury. When Cadbury FX loss at over 20 billion, one was wondering what was happening, And while that investors immediately started selling off, and the stock lost about a third of the value this week. This was a stock that was looking to break 20 Naira. Now the stock is just looking at 13 Naira, So it was really a very bad side for the consumers. And then Nestle came in and broke all the charts in terms of negative FX loss. And it really showed that it was so bad that it wiped their shareholders' equity fund. I think they have a shortfall of about 46 to 49 billion Naira. And that was particularly because they had significant FX liabilities. So while the banks were more on the long side, which First Bank brought out their best results ever in the 130 years of the banking industry. What we saw in the consumer index was consumer fast moving goods was much more opposite. And we could be saying who to be blamed, but just brief perspective. I think if you look at Dangote and MTN, their results wasn't that bad. I think their CFOs did a wonderful job, to be honest. And one of the reasons was because Dangote and MTN dipped their hand into the debt market. They raised their capital pretty much mostly in Naira in recent times. So their FX export liabilities wasn't as much as what we saw in the likes of Nigerian breweries in Guinness when you compare with their cash business. So I think CFOs did the job. The Naira losing 40% in the month of June was an headache for many of them, and it really showed in their annual results.
So let me just let me lay this out, right, for Nigeria and the Nigerian market, and just to explain what you're saying. You are essentially saying if you are trading in Naira, if you were using Naira and you were in Nestle, because you needed more Naira to buy more dollars, you had to draw from your reserves, from your bank account. That wipes away your reserves, and that's what we see in the result. Not just Nestle, Cadbury, Nigerian breweries, Guinness, all Unilever, all those fast-moving consumer goods. The story has been the same. They are making profits, right? Or let's say they're making revenues. And those revenues could be inflation-driven revenues. Then their cost of sales has all gone up. They might make operational profit, but overall, the result have been that the exposure to the dollar is killing the multinationals, the fast-moving consumer goods sector, even the large corporates in Nigeria, apart from the banks. That's what we're seeing in Nigeria. Just to summarize what you're saying, right?
Yeah. But we had some pockets of, when I say we use the word financial engineering, because if you look at UAC, for example, they had FX gain of about 3.5 FX gain of about 3.5 billion. If you look at Zebra, for example, Zebra didn't do too well, but if you look at their FX credit, rolling over 100 million, that really gave them decent earnings. So total had decent. So we saw pocket of the fact that there were some outstanding financial structures by their CFOs that really immune some firm. But generally, consumer, they didn't see it coming, and some of them had little options because you see, Nigeria is an import-driven economy. Our energy market, our derivatives market is not well deep. If you look at recent data, Sterling and Access Bank went into the recent Naira futures market just to prop up. That hasn't brought excitement. Bloomberg did a story that one of the reasons why we're not seeing such excitement in that market is because, Naira had an intraday high of 869. So it's very difficult for hedgers to be able to know what price to really put in. So it's really been more like direct hedging. It's really been much more like staying out of trouble. The market has not been that liquid. Look at liquidity in the market is not something likes of MTN and Dangote want to tackle. So our market, on the other side, has given the CFOs little options, like what you see in other markets, to hedge their risk. Because one will say, why didn't they use forward contracts, roll out hedging? Why didn't they do creative options and things like that? But our market practically doesn't support this thing. And, historically, I don't think the Naira has dropped 40% in a month ever before. So the sudden statement by the president and the lack of liquidity to follow up the reforms really kept the gap in the Naira market. So while it looked like the devaluation of the Naira allowed an increased retail participation in the market, it was bad news for those companies, Carol.
Yeah, I hear you. I'm interested in this UAC topic. I've just packed that UAC. Let's come back to UAC, why they were able to make that exchange gain and the others were not. But let me just give a brief overview of the Nigerian market, right? The stock market this year is looking impressive. Well about, is this 52% up year to date, 39% up. This is Nigerian stock exchange, right? Our price to earnings ratio 9.2. It's gone up, but the Nigerian stock market is still cheap. So if you buy the market as a whole in Nigeria, you are buying it at about 9 times the earnings, right? So Lumde, would you say at this time that this market is still undervalued, or are we reaching that crest? Has the dollar price and sort of brought these high-flying multinationals down to earth where they're now good buys, or do you think it's warning sign to say, listen, there's something wrong with the economy, let's watch and wait? What's your take now of the overall market? Good time to get in, or should we say, listen, red signs, just watch out and see what's going to happen in the next few days? What do you think?
Before I give that response, so disclaimer, this is not a financial advice, this is just for educational purposes. And, where the objective is just for us to look at why the market seems to be in an overbought. But, the last time I came to this space, you asked me that kind of question. I said, well, I've reduced my positions in the market by more than 90%. And I usually follow the Warren Buffett style that you buy when the market is being in panic mode, and you sell when the party is on. First of all, if you look at the earning results, it doesn't justify a lot of companies' price. You look at the present earning result, and also the fact that there are still more headwinds to pass. I was looking at the latest headlines from the Manufacturer Association of Nigeria, and they spoke about the fact that most companies are complaining that they spend between 30-40% of their operational costs on energy.
True.
And crude oil prices are just about breaking above $85 a barrel. And if you look at Goldman Sachs analysis, we are looking at the fact that it might be a $90 barrel. So if you put that in Naira perspective, we're saying that oil prices could go as high as 800, 900. That would definitely erode the margins of these companies. Also, you look at consumption. Yes, you could say many of these companies had an uptick in revenue. But if you look at consumption, the way consumption looks like across sectors, because you look at Nigerian breweries, look at Guinness, it wasn't a fantastic, despite the FX, it wasn't a fantastic result. So yeah. I feel that with the fact that inflation is eroding the purchasing power, we're going to see much more. We're going to see much more downturn. And apart from the banks that have really evaluated employee salary. Wema, Zenith, GT, UPA. That hasn't been said on the other side. So companies might likely consider reducing operational expenses, and layoffs might come in place. So for me, my outlook of the market is from British. I'm neutral. Neutral in the sense that wherever I have, I'm holding. I'm not selling, but I'm not buying. And I'm not buying because, first of all, the outlook of the Naira is been negative. Absa Group, one of the top banks in South Africa, projected that the Naira might fall as low as 850. The economic intelligence unit in the United Kingdom spoke about the fact that the Naira might go as low as 1,877 Naira by the end of Parliament. That's if the electoral tribunal calls the result positive. So it's been kind of pessimistic, and IMF also clouded the outlook on the fact of the economy, distortion, climate change. You see the heat wave in the United States, and so demand and things like that, all those things definitely have an impact on the market, and I don't see how Nigeria is insulated. Then finally, security. Look at what's happening in Nigeria. Look at security pressures and things like that. That also can create some form of instability in the mid and long term. Although we emphasize that the ECOWAS security team will be on top of the game. So all this really shakes to the fact that the market seems to face much more. But the president reforms have been keeping the market to this point. So it's a much way to see on the bullish side, but I'm neutral.
Gotcha. You're neutral. So because the big elephant in the room is consumption. Even before in 2022, even before we had 2022 consumption in Nigeria, as measured by the Nigerian Bureau of Statistics, they published this expenditure report. It was zero, not zero, negative. So Nigerians had stopped consuming. Why? Because wages were flat and cost has gone up. So Nigerians were basically doing survival mode. So you spend exactly what you need. There are no discretionary the spending is all going to be fuel and food, more or less. This was before we had the 300% rise in cost. So 2023, we've got the cost of diesel go up, cost of fuel go up. We've had wages still stagnant, right? So that means this year, going into this year with the new reforms, we're seeing costs in Nigeria have gone up. So I'm curious who is doing this huge buying, like in the market per se, right? Apart from when you talk about First Bank, you see what's happening with the Game of Thrones going on there. The average Nigerian doesn't have money to spend. The average Nigerian. So is this going to, and the market is up 58%. Is this 58% because of those big Game of Thrones buys we've seen by the institutional players, or is it the rank and file Nigerians still going to the market to buy?
Yeah, very good question. So if you look at it on a larger context, I think you've answered most of the points I wanted to highlight. If you look at stocks like Kirigu, Dangote, they're highly concentrated. So it tells you that the reason why we're seeing those prices are definitely the major owners. Dangote recently did a buyback, and the stock rallied 30% in a week, had an upside. So that really propped up. Also, pension funds, definitely are taking interest when you look at the fact that for many weeks the debt market hasn't been so enticing. So you've seen retail investment. You can't really pinpoint, because one of the indicators I use for retail to get the vibes of retail is how they buy penny stocks, because that's where you see many Nigerians buy penny stocks. So if you look at Japo, for example, now Japo at the beginning of when the election was about to start, Japo was about 33 kobo. Right now, Japo even broke above 1 naira. So the participation of that stock has been very high. But that can't be said again. If you look at Wapik, if you look at some of these penny assets, that we're not seeing that buzz we're seeing. And also the fact that some of these stocks have been left that ranking to the medium cap size. Fidelity, for example, because that's trading above 5 naira. So the stock now has been ranked as a medium capitalized stock on the exchange. So yes, I think you're right on the fact that real wealth, when you talk about retail participation, it's very difficult to pinpoint, because most of the upside you are seeing in the major had been insiders buying. First Bank is another good example you mentioned about. the Game of Thrones we spoke about and things like that. We saw the stock at some point looking like it was going to break above 20 naira. The Honeywell, all the issues came in. The stock went back, but positivity around the results took the stock up. The same thing with EcoBank and things like that. So yes, you're right. But at the same time, also Nigerians are increasingly interested in the market because look at what is happening with the Security Exchange Commission and Binance. Binance got blacklisted. So Nigerians have little options to invest in markets.
Yeah.
So the stock market seems to be the only saving liable option to put your money in for.
Yeah, because William, to emphasize the point being made, right? Was it 2020, 2021, or when was it that Dangote, that Nigeria was the best performing stock market in the world? I believe
2020, we did a 50% 2020.
2020. So 2020 Nigerian stock market was the best performing in the entire world. That was driven by just one stock, Dangote, when Dangote did the stock bye-bye. So when we're looking at the 58% return, right, to the year in Nigerian stock market, we could say that that's because the big stocks that make up the capitalization are moving. And it's being moved by one or two players. First Bank, Dangote, Bua are moving the market index. But the retail participation itself, has not been organic. It's really those big boys moving the market. So the headline numbers look big, but the retail, like I said, penny stocks, nothing's really happening there. So instructive. Yeah, instructive. And again, guys, we're talking about the impact of Nigerian devaluation, Nigerian stocks, Nigerian stock market, and overall investing in general. So if you want to speak or have a question, please go ahead and request and I'll add you. But let's go back to this UAC, how UAC made a Forex return that was positive, but the others did not. There is this FX market, this FX forward market is on FMDQ. I always see it there. Why didn't the treasurers of all these companies hedge? You are talking of all the companies, Cadbury, Nigerian breweries, Guinness, Nestle, Unilever. Why didn't they hedge? Does that market really work? Do you have an insight? Why didn't they go and say, I import? So if I import and I'm going to keep on importing, why don't I just go hedge my exposure in that market and buy? Or was it too early, or was USC just lucky?
I don't think it's luck. I don't think it's so. Like I said earlier, the average CFO in these firms, they are well exposed and experienced. So I don't want to think that it's from a point of not being competent. I think it's from a point of the options they have. Nigeria is not a very liquid market. If you look at the stock, for example, look at the Nigerian stock sports market, for example, look at the investors and exporters window, liquidity in that market. That's why you're seeing such irregular volatility. When you see spikes in markets like that, it tells you that liquidity is a problem. So if you can see that in the sports market, then what it's telling you in the derivative market is that it's much more good. So yes, we could argue that, they had choices to go to the FMCQ, but I feel that they would have weighed their options, and also the fact that nobody saw a 40% drop in the currency, Naira dropping against the USD in June. That caught everyone unaware. And
really, but everyone in Nigeria knew there was going to be a devaluation. I mean, everyone.
Not this bad.
Not this bad.
If you asked me how the devaluation was going to come in play, because I'll tell you why a lot of people have been scared. Before the devaluation, I listened from Goldman Sachs to Morgan Stanley to JP Morgan to Standard Chartered. I followed their forecast. They said it was going to be between at most 550, 650. Nobody said 750, 800. I did not see that number. And that was just to tell you that the reason was because they felt that since they managed float, that at some point the CBN would interfere, support. But the reality is that the FX reserve is showing that what we are seeing on the CBN's website is not what we are seeing, because you look at it. Since the devaluation of the Naira, the CBN's FX asset has dropped to 2-year low. It's even the liquid FX asset is at $33.2 billion. And if you look at the outlook of Economic Intelligence Unit, they spoke about the fact that, we don't really have we don't have so much to back to keep interfering in the market. And our all receipts is not doing so well. Last week, NNPC was revealing that they had over 200 oil debt incidents. That really weakened the morale across a lot of people that were being optimistic that we might break above the 1.4 million barrels a day. So the market didn't see that bad. So I don't think it would be fair for us to blame those CFOs that they should have seen that the devaluation, they would have had a range. I'm very sure of that. If you look at Airtel again, that had 451 million loss, FX loss. I don't know the one they have particularly in Nigeria, but it really weighed on them. And the FX loss really weighed on them. So a lot of companies, because of their liabilities were in FX, people can argue that yes, FX was subsidized, but that drop really broke the canvas back of many of these companies.
Yeah, again, okay. I'm gonna let you go, but again, I'll come back and say the forecasts are all fine and dandy, and I think what you're saying is that they assumed that the Central Bank of Nigeria would, at a point in time, use its war chest of about 40 billion to intervene in the market to keep it from going to 800. Perhaps the central bank is doing price discovery. They want to see the limit, the elasticity of demand of the dollar in Nigeria. Perhaps that's what they want to see. The central bank is trying to see that to allow this market. You think so?
I don't think so, because they've not been able to clear the backlogs. IAT, they've not been able to pay the 3 billion they are owing with traders. We've not done. The only thing we've done recently is just the Eurobond payment. We still have backlogs, FX backlogs.
Which they must do. Which they must do. They must pay Eurobond now, right? They must
exactly.
pay.
Exactly.
Okay, so I hear you. Okay, cool. Let's get a few guys in here. I think we have a few guys piling up. We've got Victor. Victor, go ahead. Olumide is here. I'm here. What's your take on what we're talking about? Where do you see this going?
All right, thank you very much, Kalu. Thank you, Olumide, for this amazing spaces. So what I actually have is a question. I have two questions. I don't know if that's okay to ask.
Go for it.
From a retail investor's perspective.
Go ahead.
Okay. So the first question is, you see, earlier this year, I usually invest with, Bamboo Shaka. So I was investing with Bamboo Shaka, so around the beginning of the year, and then towards June, July, even without buying any equity or any of the stocks on those platforms, just putting in Naira there, changing to dollar, and taking it back to Naira, I already made massive gains because of the devaluation.
Exactly.
And that was really massive for me. And I was like asking myself, I'm like, so I didn't even invest, but I just put Naira in dollars, and I'm making a lot of money already from storing this money in Bamboo. So I'm looking at the devaluation, and I'm like, with this level of, with the level of where Naira is going to, what is really the viability, or how do people trust that, this stocks, for example, in Nigerian Stock Exchange, are going to be attractive to even invest in, looking at the fact that the Naira is going down. Of course, it's not going to like plummet down, but then it's not. There's no confidence anymore, and people want to rather go to the dollar, a stable currency, or rather a global reserve currency, and then use that as a hedge. So I want to get your thoughts on the confidence with the Nigerian market versus the global market, and what's the possibility of the Naira really coming back to give that level of confidence of who to rather trade Nigerian stocks.
I think Olumide has been posting some very, very interesting tweets in the last week, and he will say something like, if you buy maize or if you buy property, you get more money than if you invest in the Nigerian stock market. I'll let him talk more on that. But look at the way, let's pick a particular stock. Again, I'm not recommending just picking a stock at random. Zenith Bank's price to earnings right now is about 4.6. That means if you buy Zenith Bank today at about 34 Naira, you are buying it about 5 times its earnings. That's kind of cheap. The average for the peer for Nigerian banks is about 4.6. What do you get if you buy Zenith Bank? You get about 9.41 in dividends. So you buy that stock, you are going to get about 9.41 dividend return, not the price appreciation, just the dividend return. Does it beat inflation? No. What does it give to you? It gives you the chance, in quote, that if Nigerian economy moves up, then it moves up and then you buy. That's the reason why people buy stocks anywhere in the world. the opportunity to participate in the economy improving. So when you buy a stock, you make the profit when you buy, not when you sell, when you buy. If you buy at a cheap price, then you set yourself up to make a profit. If you buy when the market is good, right, that means you're giving yourself a very, very low margin of safety, right? Like the stock goes up, how high can it go before you can sell and make say 25%? So to answer your question, right, I think the Nigerian market right now is going to a flux. There's still uncertainty. We don't yet have a handle on where Tinubu is going to. With the Central Bank of Nigeria, they were very, if you look at the last MPC meeting, I was seeing a comment, we want to assert our independence. When you say something, that means you are really not that thing. If you have to keep on repeating that you're independent, maybe you are not. So they are also trying to figure out where they should be post-Soludo. And this uncertainty is what is showing up in the FX market. Lumde said doesn't agree, but in a way, those foreign rating agencies were hoping that somewhere down the line, the central bank would come in and spend money in the market. The central bank releases $1 billion into the market, dollar will crash. They haven't done it. And if they don't do it, then this pressure will, like people like you will just put money in and make a return on the dollar. Like I posted a long time ago, if you simply bought the US dollar the day Buhari got into power, and that's all you did, every year you bought US dollar, you didn't buy stocks, you didn't buy bonds, you didn't buy property, just holding the paper called the US dollars in Nigeria was the best performing asset class over the last 8 years. And it hasn't changed today. Nigeria has to move from, and what you're doing is not bad, I'm not blaming you, but as long as you can make money from simply holding dollar, then the economy can move forward. We have to make money from buying Okomo oil or from investing in infrastructure fund. That's when we can start to see real connection between the stock market and then the main street, the guy on the street. Olimide, what's your take?
Yeah, very interesting. Yeah, you said most of the things I want to say, but I want to come from a different point of view. So, if you look at the fact, if you're a dollar earner, for example, and you're Nigeria, keeping the dollar, I don't think is really a smart move. If you understand, just like Carlos said, look at how to position yourself, look at how to calculate the value of a stock. So I'll give you a good example. So if you look at the month of November, for example, I'm just giving a number, for example. So $10,000, $10,000 at that time was just about 7 point, at the black market, P2P was about 7 million naira, 7 thereabouts. So I looked at GT and I was like, oh, GT 16.8 and Zenith, and I bumped everything. So rather than keeping my money in the domiciliary account, I kept my money in those stocks because I knew that, well, I was not even betting on devaluation, to be honest with you. I was betting on the Naira, the scarcity of the Naira, because I felt that banks definitely will have more exposure, they will gain from the fact that a lot of people will go online and there will be less cash use. So yes, the stock market started rallying at that point. So if you look at it from here to this point, I've made 100%. I'm taking my money back to the P2P market and converted it back to dollars. So it's definitely about $20,000 right now. So if you had kept it in GT, you will not get a single time interest. So sometimes it's always very wise to understand your advantages and utilize it very well. Though, P2P is not like the CBN allowed window market, but I'm just giving you an example just because my earning capacity is in dollars. So if you also understand the fact that, keeping your funds in the dollar, you also need to look at inflation and look at the cost of getting those dollars. Are you getting those dollars from your earnings? Are you getting the dollars from converting to the black market? If you got the dollar at the CBN rate and you just kept, I would say yes. But if you bought the dollar at a 7 or anything above 700 naira, I feel it's not really a smart idea just keeping your funds in the domiciliary account. So what am I saying? Definitely you look at other markets. If you are very conservative, then you definitely look at the Euro bond or you look at the US Treasury market where you can get yield on dollars, because the likes of Apple, the likes of Google, Alphabet, they don't keep cash. I always make people understand that keeping cash erodes yes, you could say the dollar erodes lesser than the Naira, it still erodes. So how do you hedge against US inflation? Because you have to be a smart investor. So you definitely keep funds in things like that. So how do those things? There are banks like Standard Chartered, FCMB, all those, they have dollar investment funds that you can also take advantage of. So yes, I think for me, the problem is the fact that the CBN mistimed the way they carried out the devaluation. Yes, we supported managed floating, but you see, what the CBN failed to realize is that sometimes it's not just the policy that matters. The market is all about PR. The market is just, let me give you a good example. If a model enters a party, a beautiful model enters a party, everybody will say, wow. Why? Because she has caught the attention of spectators, or those in the party. The next thing is, if the model starts making a lot of sense, people will like, oh, they want to talk to her. But you see, what I'm saying here is optics matter. So let me give you an example. If, for example, the president announced that, oh, yes, so we're going to unify the exchange, and that week alone, we got a phone call that Saudi Arabia is pumping maybe $5 to $10 billion, or Ngozi spoke with Goldman Sachs and Morgan Stanley on the fact that they're trying to bring in a multi-international supported fund that will really keep based on the reforms the president is carrying on. The Naira speculators would have been bought. What we are seeing is not price discovery. What we are seeing is vultures taking advantage of the FX market. And Obiora immediately warned about these things because I read their FX. Anytime they do the interest rate decision, they always drop statements and give rationality behind. You go see it, you read deep. I usually read why they go behind their decision. So it's been spot on that these things were going to happen. But the problem was that we were just chasing the cosmetic approach. We did not follow up through. And that was why spectators, you see, they're like sharks. Spectators are like sharks. Once they smell blood, they start eating the market. So this is not a price discovery. I don't think the Naira at that, this is the true value of the Naira. I think it's highly overvalued. But you see, the truth of the matter is that we are not exporting. We have the Minister of Finance is not out. The CBN governor hardly talks. When he talks, we're having confusion. The last MPC meeting, he spoke about the fact that they were not thinking of unifying the exchange rate. Oh, yeah. That defeated the purpose. So what were they really doing? So those are the questions, that the market keep asking, and that's why we are seeing that volatility in the currency, and definitely it trickles down to the stock and other alternative investments.
Well, Olimide, you open up a can of worms. You are saying that the Naira is overvalued, and people are going to call for your head because you're right. I did tweet that the problem with Nigeria is that we've anchored the price of the 400 to $1. That's the anchor we have in our head. So when we see the dollar at 900, we say it is expensive. Dollar is 900 because we are coming from 400. But the value of the dollar was never 486, was never 400. The value of the dollar is what you get on the streets of Lagos or Aba. That's the real value, not what the CBN gives you. And that's the value. It's about 800, it's about 850, it's about 790, depending on where you buy it from. Once you locate your mind that is the real price, and you want to ask yourself the next question: is Nigeria exporting or is Nigeria importing? And of course, you know that the oil fields, the pipelines have been broken into, so we're not exporting. So if we're not exporting as much as we should, and we are importing as much as we can, then of course the dollar should be stronger and the Naira should be weaker. It's pure economics 101. So when Victor asks the question, will the Naira come back? Naira can only come back if Nigeria exports more. And let me explain export. Export doesn't mean you are exporting cocoa. It means you are also reducing school. The guys are going to school abroad. Guys are going to the hospitals abroad. But you are also doing services, right? Burna Boy. We talk about Burna Boy and Wizkid every day here because those guys are creating revenues in dollar terms that we're not tapping into. Nollywood making films, we're not tapping into it. If we don't export and we don't cut back on import via import substitution, there is no way Naira is going to gain value. Just no way. Right now, like Olimide has said, it's speculation. If you hold a dollar bill today, what's the worst that can happen? Naira will gain strength, but you still have dollar. the dollar is still, you still hold it. It's not going, so you don't lose holding the dollar. But if you hold the naira, the worst that can happen is that you lose money. So you see the problem. If I hold dollar in my pocket, even if naira gains value, I'm still holding dollar. I'm still going to buy my same $1. It's in my pocket. It's not going to lose that. It's not going to crash by 15%. But if you hold naira, it can crash by 20% in 24 hours. And that's the big problem, Victor. That we need to get certainty of purpose. Let me just talk about the central bank governor last week said we don't want to. So what were they doing? That's the central bank governor or the acting guy. So we have to get our house in order. Emefiele, the central bank governor, was shown on TV, on the press, like a pastor holding Bible, dressed in a frock, going into court. He is still the central bank governor of Nigeria. That's what the guys on Bloomberg are going to see. That's how we've arrested the central bank of Nigeria's governor. And what was he charged for? That he had a Dane gun. Nothing else. So the secret police arrested the guy because he had a Dane gun. That's the messaging. So would you, as a portfolio investor, inflow $1 million to Nigeria to buy bonds if you see the central bank governor being carried around? You see the secret police, Nigerian police fighting in the courtroom. Would you invest $1 million? These things have consequences, Victor. So when we do these things in Nigeria, we are plugged in, people are watching, and then that's why your yields go up. They are watching. All right, Victor, thanks a lot. BBM, I've got you on the floor. BBM, what's happening?
Oh, thank you, Kalu. Please confirm if you can hear me.
I can hear you.
All right, thank you very much. Good evening, everyone, and thanks for the opportunity to speak on this. Just a very quick one. Mine is a form of like contribution and other area that we can also consider on this subject matter. And I quite agree with Olumide to a very large extent as regard the fact that companies that were victim of these FX losses like Cadbury and Nestle is not that maybe perhaps I don't want to maybe like the CFO doesn't know what to do, like they don't really know what to do, or maybe like something happened or thereabouts. And what's it called? Other company, a particular company that was able to sail through is also not a matter of luck. So I believe that these companies, they are being led by CFO that are knowledgeable, they know what to do. So it's just a matter of options that they were being exposed to. And another thing that I would love to also mention is the fact that companies were not really given enough time to prepare for this shock. Like, it was a shock to a lot of the company. The president was just giving a speech, then just mentioned about the devaluation and all, and the markets all went everywhere, and everywhere was scattered, and also it was more of like a shock and everything. And that's the reason why a lot of companies, especially FMCG, they are really, really feeling this thing. And I also want to mention that in addition, that investors will actually be impacted, like investors in all of these companies, because the true sense is that this will definitely affect their cash flow and in the end affect their dividend. So I want to mention that investors should manage their expectation in this kind of a period, because the returns that they are going to get will be highly impacted. And lastly, as regard the tax implication, because I'm a tax guy, so that's the most important thing to me. I would like to mention that this is just an accounting loss. This is just an FX loss, which is not allowable for tax consideration. And because of this doesn't affect the tax liability. It doesn't affect the taxable profits of all of these companies. They will still suffer the normal tax that they're supposed to suffer, irrespective of their FX losses or thereabouts. So that's just one or two inputs that I would love to.
So just to be clear, you're saying that even though Nestle has wiped away its shareholders' funds because of the devaluation reserve, it's still going to pay a tax on that quote unquote revenue it made.
Definitely.
So in your view, is this going to be net positive for the stock? Should I go? And again, we're not giving financial advice, right? But if I was trying to buy a stock, would I look at that and say that's something I should? What do you think?
Okay, I've said it. So I think I've mentioned something around that. As an investor, I don't think it's really a good time for an investor, because it definitely affects the returns that they will get. But the fact that the taxable profits will not be affected is just due to the tax environment in Nigeria.
Gotcha.
We have allowable expenses and expenses that are not allowable. And CITA, that's company income tax, specifically highlighted is that, okay, this kind of transaction is not an allowable expense, which is like also an FX transaction. So it's not an allowable expense, and therefore they will still be subjected to tax at the applicable rates.
It's not a loss, folks. It's just an accounting loss. You're still going to pay tax on that.
Exactly.
Gotcha.
And also to add, over the time, this loss, this FX loss, it will net off. Like over the time, it's more of like an accounting loss or thereabouts.
Interesting.
Yeah, can I add something here? So yes, that accounting, because I've been hearing that fact that accounting, paper loss, to a large extent, yes, I agree. But if you look at Nestle, I'm not so bothered about Nestle because most of their exposure, through their foreign, their parent company, and you also look at the fact that substantial amount of equity comes from that entity also. If you look at the ones that really dropped to Cadbury too, I'm not really bothered. But this is where I get bothered. So the operational expenses definitely would have to come down. And the way the Nigerian economy, we're looking at strike, NLC is calling strike August 5, that would definitely have a tailwind on consumer consumption. And, the results have definitely casted a dark cloud on, because, when I was talking to a lot of people, I was trying to get their reaction, especially those in it. And they were like, Nigeria's economy is not really functional because, in the real sense, if FMCG made such losses, banks ought to make heavy losses because it means that banks' non-performing loans should go up because it means that we're going to see. But the reality is that many of these guys did not get loans from Nigerian banks. And if you look at Nigerian banks are not giving real sector the funds that they should. They're rather becoming more like speculators or traders. So most of them, if you look at First Bank, they made substantial amount of their money from the upticks in financial instruments, So the question is, what kind of economy are we running right now where our FMCGQ are having great FX liabilities while our banks are becoming more like investment workshops and the private sector is with little very dried up liquidity. So I think for me, it brings a lot of questions, and that's why I said that the president needs to step up his game. First, we need to bring the liquidity, and I don't think right now, I think we have an introvert as the CBN governor. We don't have the kind of Sanusi like CBN governor. We don't have the senators. I think they're not taking the ministerial screening very serious because it's about 60 days since the regulation and we don't have a minister of finance on board. So how do you expect investors to have clear policy direction? Because what the market is looking at right now is the president really pro-market driven. The president really going to cut down on the excesses. What's the tax policy? We heard different reports that they're going to be using the corporate affairs, CAC, identity number for companies, NIN for. These are rumors we've not seen. So a lot of CFOs, the accountants are looking at how to get prepared and things like that, but there's no clarity. So I think until we get those things, it's really going to be a tall order for the market to have that gain. So I don't see us having that 2020 return, 50% year to date gain what we had. I don't see the market outperforming the NASDAQ this year. So I think it's very wise for people to calm their expectations and relate to their financial advisors or stockbrokers on stocks to buy for the longer term, not for the short term.
And again, Olumide, just to make this point, what it means is that if there was no 60-day cap for Tinubu to have submitted a list, we would not have had a list of ministers today. That's what it means. Because I think this list was because of they had to submit something. So you ask yourself, what is taking so long to appoint an economic team? I mean, why can't he just announce the economic team, put it out there, the market knows by that team his intentions, then we move on. I don't care who the Minister of Sports is going to be, but I care what the economic team is. I want to see their pedigree. That gives me an indication how they're going to fight inflation, how they're going to attract investment. Why can't we just do that?
Yeah, but we have an idea already because if you look at the ministerial list, I think, to be honest with you, I was a bit excited about Wale Edu because I looked at his, I looked at his profile from being a commissioner of Lagos and how he moved to Chapel and Stampede back. But I was highly disappointed that he made appointments of politicians that did not bring FDI in 2022. Ebonyi, Rivers, Kaduna, according to NPS, brought zero FDI investment. So what are you telling? And we have FX liquidity problem. That's what is facing the Nigerian economy. FX liquidity problem, high insecurity. A lot of people are not going to school. Things like that. So the question is, what is your ministerial cabinet all about? Is it about compensation? Is it about patronage? Or is it about following your reforms? So those are questions we need to ask because whether we like it or not, if you cannot perform at the state level, I don't see the miracle we perform at the federal level. In terms of, I'm talking about terms of ethics.
Let me play devil's advocate. I hear you, but I mean, he has to compensate. That's number one, and number two, these are going to be federal appointments. That if you can't bring in FDI, you can bring local direct investment. Let's pull this thread. Let's say he appoints a Wike, right? And then a Wike can then sort of get the Rivers money or the Naira money to then invest in, say, you get where I'm going to. There's local investments. He needs to get he needs to tie the Nigerian economy in, less breakage of pipelines, maybe that is what he's thinking of, right? Wike, Ebonyi, all these guys that have not really performed, like say, internationally, but locally have performed. Should that not be a factor for him?
Well, just like you said, I'm not a politician, but I'm just looking at the market based on the fact that what the market is looking at. I think I'm looking at some comments and people are saying, well, the market has brought in 5 trillion year to date. I think you also need to look at the fact that the market was bound, the options had already started. And I spoke about the fact that, you see, the devaluation of the Naira, if you look at the dollar terms of the market, look at the fact that, if you look at it in dollar terms, the market has barely moved, And the fact that now we're seeing moderation in key stocks like Cadbury, for example. Cadbury used to be a 20 Naira stock on the NGX. Now it's about 12 Naira. Now it's looking at 12 Naira. And if you break below the 10 Naira, we might get back to its usual 7 Naira. So the question is that from a dollar perspective, has the market really done well? Then you look at the inflation number. The inflation number only captured 2 weeks in June. So it feels like we're going to see higher inflation number. And for investors to bring their money in, Carl, you know that they will really look at real return. So you look at the fact that you have the NPR, yes, Treasury bills is looking at 12%, but if you bring in your funds, you still have a negative of about 10%. Well, why not keep my funds in the Fed fund, US Fed fund, where I can get a minimum of 5.5%? And if I want to be more aggressive, I go to US corporate bonds. So those are questions a lot of investors are asking. And that is why I said that I don't see the miracle the president is going to do right now, except he goes to the IMF or powerful countries to get in short-term or mid-term liquidity. Because foreign portfolio investors are looking at more attractive options. The Bank of Japan broke markets on Friday. You saw the yield curve uptick, and a lot of funds are going there. Look at Bank of England on Thursday; they're going to increase interest rates, most likely to 6%. So the Greece is more attractive than
Nigeria.
Nigerian budget are saying too.
Yeah, I mean, and that's the thing that Nigerians don't seem to get, that we are competing with other countries. When they were screaming that the stock market was because of Asiwaju, I asked them, what if it goes down? Will it also be because of Asiwaju? Be careful to no country. When Trump was claiming the stock market went up because of him, the stock market went down. He had to bear that loss. Markets go up and come down. So be careful about attributing success to just what the guy said. The markets go off sentiment, future earnings. So just be very careful. But we're competing with other countries. If there's the dollar out there, it can go to China, it can come to Nigeria, it can go to Greece. Why should it come to Nigeria? You've got to attract that Naira to Nigeria. It's not everyone knows that it's my mandate. People want to see that the dollar is going to go to where it's going to get the best return. That's what I see. Akin, you've got the floor, sir. Akin.
Hello, can you hear me?
I can hear you, but if you speak up a lot, Akin is echoing. Okay, let me get Iwelabi to speak. I can sort that stuff out. Iwelabi1, how you doing? Go ahead, sir.
Yeah, good evening. Can you hear me?
I can hear you. Go ahead, sir.
Okay, interesting. I think I will be looking at this from a very, very different perspective, which would be from a corporate reporting side of things, most especially how it affects the stock market, right? So we've mentioned something around what the CFOs are doing and stuff like that. I think I need to make clarity, some sort of clarification around that, why probably no one will have been able to do anything about it. Why? Is because usually many of these companies have been reporting, translating in using I and E window rate, FMDQ and stuff, and not necessarily the black market rate. You know, why on the street you are getting dollar for as high as 750 back then and all of those things. On the I and E side, it was still around 460, 450 and thereabout, right? And so this FS loss has been huge because as at the time we are reporting, say for example, on this guy's book, between January and June, right, before the unification of FS, what has been happening is that these guys has been reporting using 460, an average of 450, right? And then when they are translating at this rate. And all of a sudden, they have to translate at 600, 700. And this is the reason why this FS loss is really huge. And in my opinion, right, things are actually going to be stabilizing like in the nearest future for these guys. And how do I mean? It's because if you compare now, things are becoming real. It's going to be tough. Obviously, it is tough. And it's becoming a lot more real than what these guys have been reporting before now. And the FS loss in question is actually not cash-based, right? It's actually accounting form of loss. However, it's going to affect the overall profits that will eventually affect the dividend share out, right? So what I'm looking at is, say for example, now, these guys have started, right now, we've seen companies incurring as high as 24 billion as FS loss. And why? Why would that be? Is because of the fact that when these particular facilities and all of those things that were being recorded in their book, the first time they were recording all of these things, they were probably translating at 400, 450, and thereabout. But now, when this retranslation are being done, it's being done at 700, gotcha. 750. And you know, the margin is high.
So that's,
and now that will lead to a lot of loss.
So that's where the loss is coming from, because they're now marking their books to market more or less.
Exactly. So where I'm going now, why I say things will be a bit stabilized in the nearest future for these guys particularly, though things will be tough, right? Economically, everything is tough. And where I'm going is this. In terms of reporting, this loss will come down drastically in the nearest future. And how do I mean? It's because in June, they've used 700 to record these things. In the next couple of months, say it's going to 800, 850 or thereabouts, you know, then that means that the margin between the loss is coming down. Also, given the fact that these guys have been reporting using I and E before now, their hedging techniques has been around that 450, 500 of a thing. And mind you, many of these guys actually still trade their FS in the market. They know how they find their way around these things and ensure that they edge against certain risk around this FS. And so what will be happening now is, looking at the books, the numbers did not have to consider the reality of things. Before now, it has always been that using I and E 450 and 500 and thereabout. But now it is 800. If it is 1,000 in the market, now on your book, it's going to be recorded at 1,000. And if it's 1,200 in market, you know that this is the reality. And now you have to set out new risk management techniques to ensure that you guide against this thing.
That is true.
And I feel like,
you know, go to land the ship. Round up, sir, if you don't mind.
Okay. Rounding up, we means that, like Olumide mentioned something around the bank versus these guys and why there are no increasing non-performing loans. The truth is that this FS loss is more of, to these guys, is actually more of accounting than cash. It's more of accounting kind of a thing than cash, and that is why you still see some of these guys still be able to cover up and stuff like that. Yeah, thank you.
Excellent point. I mean, that was when I made the comment about the devaluation, what it would do to the Nigerian economy. I said we'll now right price this economy. The economy we've had an economy where there were two prices, 480 and 700 in the past, right? So things you see a packet of biscuits in the store, you don't know at what cost is that biscuit. Did the guy maybe get CBN dollars to import wheat? Then he went and imported biscuits, and then he's selling it on the store as if he bought it at 750. But now everything's going to be right priced. We're going to see everything at its real price. And then what's going to happen? Consumption will either fall if there is no palliative to boost household consumption, which will then force the government to recalibrate the economy. Because in the past, because it's 480, we're not really seeing this. Now we've seen that, listen, Nigerians cannot afford most of the stuff we have on the shelf. That's the long and short. Nigerians can't afford it without a wage increase. And if you leave Nigerians without a wage increase for too long, then stuff's going to happen, right? Let's get Okere. Is it Orekelewa? Orekelewa, did I get that correct?
Orekelewa, but yeah, it's almost.
So sorry about that, yeah.
It's fine. Thanks so much. I just wanted to chip in a couple of things. So the first thing was about the performance of the FMCGs, and I think it's important to contextualize it for people, right? Mm-hmm. So we've seen a really poor trajectory in terms of domestic production in a number of areas, and one of the main reasons for some of the import exceptions that were given to many of these countries and many of these companies and import licenses was the hopes that they would engage in backward integration, right? And so one of the things that people really have to realize is when we talk about moving from the old FX regime to the new one, we're talking about rolling back on a subsidy on the dollar, right? Mm-hmm. Rolling back on a subsidy which actually made it more profitable to import than it was to actually invest in domestic production. You can see companies like Nestle already making moves to start locally sourcing raw materials in order to be able to beat the FX losses. Mm-hmm. So that's one thing to bear in mind. And then the second thing is this. I think there's a tendency, and obviously because stocks move very fast, they're obviously quite volatile in Nigeria, to think about things in a quite short-termist way, right? Mm. I just want to remind people of the perspective that it's been just over 6 weeks, right, since the decision to partially float the Naira has been taken, right? And in terms of some of the losses, yes, many of them are paper losses. Many of them will actually be borne out as real losses, and it's up to companies to actually engage in sourcing materials domestically in order to be able to beat that. However, it hasn't even been a quarter yet, right? And so it's there's a lot of doom and gloom in the perspectives at the moment, but I don't think that 6 weeks or so is enough to be able to tell the long-term impact. I just wanted to chip that in.
I agree with you in a way. I think long term, the policy is better. The way the valued and taking the subsidies are better long term. I think where people have an issue with is the lack of speed of the government addressing the real needs of the fall in consumption, which is driven by the fall in household income. That's really where the Nigerian people are against the, should we say, policy. It's very easy. The Naira design policy was a very, very good policy, but it was rolled out so poorly that people then were against the Naira design totally. And what's going to happen now is that if the households keep suffering, then they'll be totally against removal of subsidy. They're going to say, take us back to subsidy. And once there's a popular uprising or there's a big riot and people we want the subsidy back, the government caves and then they go back to subsidy, then all these reforms are going to fall. That's my fear. So let me have you come back. Go ahead. Olumide, you'll speak next. Come back. Okay. Yeah. What's your take?
Thanks so much. I think part of it is messaging, right? I think people need to be made to understand that the solutions to these problems aren't short-term. It's not one round of palliatives. It's not one wave of the wand of the magic, wave of the magic policy wand, right? The reality is that what we're dealing with today is the long-term impact of over a decade of failure to invest, right, domestically, and a failure to improve productivity. And there's no shortcut to that. So I think, one, people need to kind of be given a time frame, and that's one of the comms areas I really want to see the government talking more about. But then also, too, when you remove that subsidy on the dollar, companies like Nestle start thinking, okay, how do we reduce our level of exposure? Because our level of exposure is like a direct consequence of these kinds of policies, right? And when they start investing in raw materials that are sourced domestically, then you start seeing the kinds of jobs that can enable people to increase their effective demand. So these things are all connected, and it's sad that a lot of the coverage of this kind of treats it as like two completely separate silos, right? If you want to be able to have the investment and the resourcing for government spending, you need to follow through with the policies. But a lot of people kind of just think the government's doing it for wickedness, you know?
I hear you. I mean, but reality is reality, right? Olumide, hop right in.
Yeah. So, interesting conversation. I wanted to just, you said most of the things I wanted to say, actually, but I just wanted to tell you that, yeah, I agree with you that we should look at the long term. But you see, the market is fluid, and the steps you take is much more important than the policy itself. And that's why I said that, see, if you look at it in retrospect, all the policies that we've condemned and which countries apply it and it's been successful because they localize those policies. You see, the problem right now is that you're saying that we should look at that companies like Nestle are looking at local. Yeah, I agree with you. But if you look at many years, most of the agricultural and the consumer goods sector are highly underperformed when Boko Haram took shape. I think I did a story then with African Reports, and we looked at why insurgency had really made those talks at levels. I put a cap. There was a time the level was 44 naira. It took more than, I can tell you, it took more than a decade. If you look at the chart, for you never to break its present price right now. There was a time the level was 44 naira. There was a time when Nestle was playing above 1.5 easily. So the question is, even with the devaluation, the question is, you're saying that, okay, yes, in long term, security has gotten worse. If you look at the outlook of the new guys from JP, from Goldman, they are not saying that the policies are ineffective. Or what they are looking at is that you have your oil receipts is getting worse. The security of the country has become much more fragile. The geopolitical divide. How many Nigerians are really investing into productivity? That's the question you should ask. A lot of people are arguing about Dangote employing Indians and things like that, blah, blah, blah. But we also need to look at the fact that our education system, just recently that we had a budget of over $1 trillion on education. The CBN data says that from September to March, Nigerians spent $553 million on foreign education. How can you prosper in an education when half of that went to basic education? So these are questions we need to ask ourselves. And investors see these things. Investors are not emotional. So they say, as you lay your bed, lie on it. So when you look at the long term, the reality is that long term is not going to wait. South Africa managed to float their currency. The currency is unstable. Kenya has the worst stock market this year in the world and is practicing a money flow system. So it's not just about policies. It's how you carry it and the team around you. That's why I said, learn from the Gozi brother, learn from the Charles Soluto. Look at the fact that they were not just competent, but they used their PR optics and the fact that they had direct relationship with investors, multinational agencies, and that brought it. We are not seeing those things right now. It looks very quiet.
Yeah, I think I totally agree with what she said, right, about the direction, the policy that in the eventually this would pay off. I just think that Nigerian families need to eat bread today. That's just what I think is going to be the problem. SAP has gone through, SAP was a well thought out policy, the structural adjustment program, well thought out to take us from imports to import substitution to exports. It's the same thing Nigeria did with SAP that the Asian Tigers did. But when we did it in Nigeria, it wasn't well done. And then what happened was that SAP has become a dirty word. If you say IMF, if you say SAP in Nigeria, it's a dirty, it's like you're abusing someone's mother. And that's what happened, that now you can't even say the words you want to structurally adjust. We're doing structural adjustment, but we don't say it because of the past. My fear, and I say it again, I support the administration removing the subsidy 100%. I support it. I support the floating of Naira 100%. I support it. My fear is that if they don't do it properly, if Tinubu just says something on speech and it doesn't follow through, and this is done properly, the pushback is going to be that the problem was the removal of the subsidy and not the implementation that followed. That's my problem. And once that narrative takes hold, good luck with any reforms you want to do in the next 2-3 years. Good luck with that. So great comments, guys. Let me get Stephen in here. Stephen Fidelis, how you doing, sir? Stephen?
Yeah, good evening. Good evening.
Go ahead, sir. I can hear you. You've got the floor.
Okay. Hi, everyone. Good evening. And hello, Lumide. I think I want to add a perspective that we probably might not have appreciated in the course of this discussion. The manufacturing sector in Nigeria actually carries a lot more weight, and I don't think we appreciate the challenges that manufacturing faces in Nigeria. They go through the full stretch of the challenges in the Nigerian economy, be it weak Naira, or be it supply chain challenges. Most of these guys sources their raw materials from outside Nigeria, and so the full weight of that depreciation in their working capital is felt in their operations. So more often than not, these guys, have their working capital being eroded, and so they need to do a whole lot to keep up with operations. So that's one leg. Second part is that even the markets they are selling to are basically poor people, and so most times they don't also have that pricing power, to keep increasing prices and all that, except they want to price themselves out of the market. And so these are some of the perspectives that manufacturing goes through in Nigeria. And so that's why you see that on the average they are not as profitable as their financial services counterparts. And so this is one aspect that we should also consider in this.
I hear you, but the Zenith Bank uses generators, and Dangote Cement and the manufacturers also use generators, all powered by diesel. They all employ the same Nigerian workers. I mean, it's the same cost base, it's the same Nigerian risk factor affecting all of them. So I get your point that yes, manufacturing and banks.
Let me just add this. The average guy on the street will probably have his 5K or his 10K in the Nigerian bank.
Your audio is very, very low, Stephen. I'm not here if folks can hear you. What your audio is?
Is it better now?
Yes.
Okay, so I'm saying the average guy on the street will probably have his 5K or 10K in any of the banks, for which he will earn zero interest, right? And the banks will make money off his 5K, 10K, right? But the same guy will rationalize spending that money to buy consumer goods items, right? So the way financial services will make money off that poor guy on the street, the consumer goods guys don't have that leverage, So that's some of the,
Okay, I take that point. That's fine. Point taken. I take that point. Let me get Vimo. Olumide, I mean, he's making a point that, banks, you have money in the bank, so banks make float income on your money, but there's no float income in manufacturing. I'm not sure that's entirely true, because if the suppliers of or the guys that buy from card brand, they have suppliers that pay them in advance, right? And those guys pay before they get goods. The multinational can also make float on the suppliers or distributors' income. Is that not true?
Yeah, you're right.
Yeah.
Yeah, you're right.
Like Dangote Cement, if you want to buy cement, you deposit cash and they give you cement after a while. But I get his point. I get the point he's making. Let me get Vimo in here. Vimo, you've got the floor, sir.
Hi, everyone. I'm actually a lady.
I do apologize. I'm so sorry. We're pronoun neutral going forward, yeah? All right, Vimo, go for it.
That's okay. So I just wanted to bring a different perspective to the discussion.
And that perspective is really looking at, and first of all, I think the policies that have been issued are frankly the policies we need to issue. The removal, the floating of the Naira and the removal of the subsidies. But I think it might be helpful for the government to look at what's happening in other countries as well, and see some of the things or some of the approaches that have been taken to address the resulting issues that have come up. So you take a look at Egypt. Egypt is also facing a devaluation, same as Nigeria. They're facing severe fiscal constraints, very high inflation, double digits, and also their GDP growth has slowed down considerably. I think they're also at around 2%, as with Nigeria. So when you look at that, what has been the impact on them and what have they done? In terms of their stock market, I'm just going to focus on that, but there's also other things as well. But if you look at their stock market, it's been hit as well. There's not been a lot of FDIs coming into their stock market. That's one big impact. And one other thing that's happened to them is for those new stocks that have been issued, they faced the problem of hot money, right? So money coming in and getting out shortly afterwards. And then what has Egypt done to address the issue? One of the things they've done is to look at support from the IMF. And I know this is something that may not be very popular in Nigeria, but look, if it's going to help, then we should very seriously consider it, right? They've gotten some short-term support from the IMF, but they in parallel, they've also embarked on a very aggressive drive to bring in more private sector investment, and they are doing different things to drive that, to do that. But the third thing that they are doing, which I think is missing also from Nigeria's plan, and a couple of speakers have mentioned this, is the messaging. And I think this is very, very, very important. The government needs to own the messaging around its policies. And it's not just messaging to the domestic market. It's also messaging to the international market. And here, I think one of the great communicators that we had in the past was Soludo. I remember when Soludo would make the rounds to the IMF, to the World Bank,
that is true.
and he would be explaining, breaking down the government's policies. Ngozi was doing that as well, and they were doing it really well, you see. And I remember there was a session that they had, and a lot of investors were beginning to ask, how do we come into the economy? This was, I think, when they were still, part of the economic management team. This is something that I feel the government needs to urgently start to do. Because right now it seems like they're issuing all these policies, but nobody really knows, nobody is able to tie everything together. And so there's a debt in, what shall I call it, in confidence in what the government is trying to do.
Interesting, yeah.
Yep. So
I completely agree with you. And to your point about Soludo, I remember way well back when Soludo was the CBN governor, where he actually, in quote now, threatened Nigerians that were holding dollar. And he said, if you hold the dollar, you're going to lose money because I'm going to come in and intervene in the market. The threat that he was going to do that kept the dollar kind of strong, because people were like, man, if you build up some reserve to attack the Naira, this guy's going to come in and destroy our positions. And it worked. He did have the dollar reserves, but the way he also communicated that strength, like you said, was very, very important. Going to the World Bank, the IMF, to tell them what we're doing and asking for support. But also, I think where Nigeria is also failing is the local communication. We're not talking enough to the local guys. I only see the Tinubu folks speak about politics, tribunal. This man did this, this man did that. They are more constant there. They don't even use the handle of the presidency. They use NTA. They use his personal handle. And I don't think you should speak as the quote-unquote president. give a press conference, appoint a point man that knows how to talk money, not Dele Alake. He's a PR guy. Appoint a money man that will speak, that when he's talking, the money folks understand what he's saying, explain how you are tying raising taxes and devaluation, and how this would in the end agree or line up with your policy. I don't think they are doing that yet, so I completely agree with you, Vivo. Did you want to come back? Olumide wants to have a jump in. Did you want to say something else before I prompt Olumide in there?
No, you totally captured the point I was trying to make, and I think they urgently need to start to do this communication really quickly. And by the way, the other last point I want to make is when you look at the FDI flows into Nigeria in the past couple of years, the largest portion came from Nigerians in the diaspora. Yeah, I know we're losing people moving to the diaspora, but the diaspora is actually an asset to the government. And urgently start, and when you look at where the flows were coming from, we know they're coming from America, from the UK, from Canada, from Germany, so they should urgently start to go to these pockets of geographies and start to tell their story to these groups of people, because this in 2021, I believe it was about $19 billion that came from these people. So if your own people are not investing in your own economy, why will a foreigner bring their own money in? And by the way, when your own people bring in their own money, it's usually more stable. They're not going to bail at the first sign of trouble. So I think that urgently this communication needs to happen, and it should ideally there should be a targeted focus to the Nigerians in diaspora, because this is the lowest hanging fruit for the government.
Well said. I mean, 2 weeks ago we had Olumide was here. We talked specifically to the diaspora. We spoke about remittances. We said the fastest, easiest way to get dollars into Nigeria is to go to Nigerians abroad, sell your policies to them, and let them bring their money to Nigeria. It's very, very fraught with issues, because you cannot on one hand talk down to Nigerians in Nigeria, then go and talk to Nigerians in America. You have to speak the same messaging. You can't tell the Nigerian in Nigeria, in Lagos, that he is not a Nigerian, then tell the Nigerian in Canada that he's a Nigerian and he should invest in Nigeria. I hope my message is passed clearly. You have to talk to Nigerians, and those same Nigerians that are Nigerians in Lagos have got relatives that are Nigerians in Canada, and they talk and you also talk. You've got to have the same communication. Elections are over, right? So I'm just talking factually. There's an appeal process. When the appeal process plays itself out, we'll talk about it. But right now, you are the president of all of Nigeria. You have to speak as the president of Nigeria and attract investment from Nigerians. Because if only one sector can give you investments, then you don't have any problem. But one sector or one section cannot give you all the investments you need. Olumide, your hand was up. Please hop in. A few more minutes, points here.
Yeah, I was so happy the last speaker really highlighted most of the things I've always been talking about. That one of the problems facing the Nigerian financial industry is PR, particularly on the government side. The PR has been very horrible. A lot of these investors don't watch NTA, they don't listen to all this gaslighting or gaps on Twitter or things like that. What they're concerned about is what policymakers are making, where money is moving, use and things like that. And I think Obasanjo captured that very well, just like you said. Soludo and his team, the economic team, they had ways they pass messages, they travel, go important session, speak with different investors, and the fact that they had reputable job experience, in different firms, it was very easy for them to align. So, my fear is that a lot of people are just looking at, the policy. Yeah, the policy is spot on. Nobody is arguing that. The steps, we complain about this step, but the most important part has been the PR. Yes, you can argue that the acting CBN governor looks more like an introvert, but see, the MPC meeting, he said that the objective was not about unifying if he had said that from day one, all this drama in the FX market would have, because see, we can only forecast as analysts, but he did not own the message from day one. If you look at the US Fed, for example, when the US Fed releases statement, it still talks. It's actually when it talks, the market moves heavily. On Thursday, the Bank of England governor is going to make a decision and is going to talk. We're going to listen, and before then, they make speeches. So I think the problem is that we politicize a lot of things, and that has really eroded our institution. Look at the CBN, for example. I was so hot this evening when the president announced the fact that they were going to create a special investigation panel to probe the CBN. You should have done that before
arresting the guy.
Before arresting the CBN governor. I'll tell you why. If you look at the drama that happened during the NPC meeting, it caught the eyes of a lot of people outside Nigeria.
True.
Because the thing was that the NPC meeting, everybody knew Tuesday because Tuesday was the NPC meeting, Wednesday was the US Fed. So on Tuesday the eyes were on Nigeria, and what do we see? We saw two enforcement agencies fighting over a suspended CBN governor that still has his face on the CBN. If you look at the NPC meeting, Emefiele's face was still on the boardroom. So the question is, what are you selling to the market? And you talked about remittance. My fear about Nigeria is that we tend to overhype this remittance thing, and I think it's very important for us to clear that part. Egypt has more remittance than Nigeria, and Egypt has a lesser population than Nigeria. So the question is, why does Egypt have higher remittance than Nigeria? If you look at Nigeria is growing fast. Yeah, the middle class, we're seeing a lot of middle class going to different markets, particularly United Kingdom and United States, but we are not seeing that number that should really make us feel like remittance is our saving grace. Yes, remittance has helped us when good receipts did not come through and things like that. But I think we are putting too much pressure on these guys. I think what the government should really look on is selling out the country's image economically, and I think that will really do a lot of wonder in the near time. If we don't do that, trust me, this policy will look like another tabloid on some newspaper.
Interesting. Okay, Akin, let's hope your audio is better now. Akin, you've got the floor.
Yeah, so my submissions are the following. So first of all, the problem with the forecast from Morgan Stanley, Goldman Sachs about Naira being about 650 is that based on academic evidence, forex markets are not actually really efficient markets. There tends to be a lot of trend following in forex markets. So you tend to find situations where the forex market has to be guided, or there's some sort of job owning, or basically to get the forex market to align with the government's align with the government's objective. So, for instance, see the issue of what happened just after the financial crisis between the dollar and the yen. The yen the yen strengthened to about $77 to the yen. That was an extreme reaction to the fact that Japan was in a stable price / deflationary environment. So it's very common for FX markets, even within liquid FX markets, for there to be an overcorrection or a spike or an undercorrection. You never really get a situation where prices are actually being efficient or actually reflecting reality on ground, even when you float them. And that was part of the reason why floating did not make any sense, or wasn't a very good idea. It should have been a gradual kind of managed float. I would even suggest that what the Nigerian government should have probably done should have been somewhere along the line of China. I know like a lot of people that hear me always say, oh, I talk about China a lot. The reason is because they have had the most spectacular policy management over the last 50 years of any country in the world. Now, on this issue of, we're saying that, it was just a good policy and everything. The thing is, there isn't enough money to support consumption in the economy. So generally speaking, what you tend to see is that consumption is going to collapse across the Nigerian economy. So several people are actually going to lose jobs, and that would further sap demand from the economy. The problem that I'm having with the current government is that they are not talking about supply side reforms. You're talking about, you want to remove subsidies and everything. They're not talking about how they're going to privatize the NNPC refineries, how you're going to bring modular refineries instead of these single train refineries to the market. These are some of the things that are still causing a lot of shortages in critical parts of the economy, which have downstream effects. So, for instance, when the fuel price is hovering at around 700, 800 in some parts of the country, it has downstream effects in terms of inflation, in terms of manufacturing, in terms of other sectors. And because those sectors cannot pass on the cost to the consumers, they would usually fire workers and still keep their prices. So you tend to see margin compression. Their profit margins will compress over time. And margin compression means that they will very likely not want to invest. And when you're not investing, you're not improving productivity, you're not hiring more workers. These things have ripple effects, multiplier effects throughout the economy. So the problem is that we're having a situation where where we have policymakers that are not really thinking things through. They just go with this boom, boom, boom approach. Yes, you can have a boom, boom, boom approach and be a Russia or a Ukraine after 1991, where they saw the economy and inflation basically just go through the roof. Or you can have a Poland that also had a gradual system of deregulation after the fall of the Berlin Wall. So it's not just about just saying, you're going to just deregulate. Another mistake that we always make here, and when we talk on spaces, is that people do not realize that in developing countries, the price signal is not usually a very efficient signal for industry. It's usually not very strong. It's usually not a very good guide of how you actually conduct macroeconomic or even economic developments. That's why you see even in developed economies, they're still doing industrial policy. If the price signal was such a good way of developing your economy, why is the US doing the whole semiconductor things that they're doing currently? So I think we should just stop this whole thing of this knee-jerk, just deregulate, and think that things will just sort themselves out. In developing countries, it's usually not.
That's true.
There's so many bottlenecks.
You're making a point about the macro, right? Where the pathway, Poland, short-term, limited, take it gradual. But Nigeria has had a capitalist economy under Obasanjo. We've had a mixed economy with Yar'Adua. We've had a full socialist economy under Buhari. So it's not a stretch to go back to say capitalism after 8 years. We've been there before. And I think Nigeria is very peculiar in that if you deregulate or you devalue the currency and you do it slowly, what they were trying to avoid was speculators taking advantage that we're going to devalue or devolve whatever and then taking positions. I think that was their need for speed, right? But again, I don't think Nigerians care if there's devaluation or depreciation. The Nigerians' worry today is that what has occurred has made their wallets to shrink. So even if you did it slowly, even if you say we're going to devalue by 10% today or every year 10%, and you don't raise wages, Nigerians will still complain. You can't change the economy. Titanic can't turn around in 5 minutes without you announcing to the crew, hey, we're going to turn around. Lifeboats are on this side if you want to get off the ship, but we're going to give you nice music as we turn this ship around. I think that's where we're failing. I don't think it's the policy itself, Aki. Nobody would argue.
Kalu, there's some issues. Yes, communication is key. But the thing is, we're not tackling real supply side reforms that can actually improve employment. Please, can anybody tell me what this government's plan is?
We don't know. But about what?
Creating jobs. There's no plan.
The president said, and
everything we seem to talk about is about foreigners.
I'm not joking.
Foreign this, foreign that. But there is no plan. And the thing is, ultimately, what creates more production is basically more employment. Ultimately.
Akin, the president said they were going to employ youths to go to the farms and that they were going to grow.
That's not a plan.
No, I'm telling you what he said. You asked me, I'm telling you his plan. And I'm not being cynic. And people laugh when he said this, but he has a point. Listen, he's going to employ youths. He's going to pay them, literally, he's going to pay them money so they are employed by the federal government. Then they are going to now expand agricultural output, corn, and the other one. So people would grow corn, agricultural output goes up, farmers goes up, GDP is tied to agriculture. Then the corn feeds the folks that are employed. So you have a circular economy where there's employment, there's output, there's consumption. That is his plan. You can expand that plan.
Charlotte, that's not true.
That's what he said.
So I'll add this.
That's what the guy said. I analyzed his program here. That's what he said. Okay, I'm going to speak next. Now I can speak.
Okay, so I'll add this about what the whole employment plan. I actually glanced through his manifesto throughout. Now, the thing is, that idea about employment actually comes from... It's
Roosevelt now.
It's Works Program Administration.
Yeah, it's Roosevelt.
Administration
in
the US. Mm-hmm. Now, the thing is, the WPA program and a lot of the New Deal policies actually did not do so much in reducing unemployment. It's a very big myth.
But it did. It did, Akin.
The New Deal actually did a lot to reduce unemployment. It didn't.
It did.
But the thing is, they feel that they'll just basically pay people to go and do basically low productivity jobs and somehow believe that somehow we were supposed to be producing more and all of that. What Nigeria needs right now is to get more people out of farms into manufacturing, into construction, less people working in tech. The thing is that tech is not going to take us to where we are going to be as a country if we want to develop and avoid a lot of the political storm that we are currently facing. So the thing is, this whole thing of the WPA program that they're trying to copy in Nigeria is just really not a very good idea. They really do not have a coherent approach towards employment and improving production. Yeah.
But Akin, you mentioned China. How did China eradicate poverty? Agriculture in the rural areas. It always starts from agriculture. Nigerians can't feed themselves currently. You have to go back to agriculture. How did the US do it? Agriculture. The Great Industrial Revolution. Agriculture. That's what China did. Okay, China did rural agriculture, then moved to the coast and did manufacturing at the coast. They fixed the rural areas first. There are many write-up on China. That's what they did. They went back to the rural areas, developed those areas, had food security, then they went to the coast and did light manufacturing, then heavy manufacturing, then copied, and that's where they are today. We have to go back to agriculture. Let me get Orekle. You said that's not what Tinubu said. You said that's not Tinubu's plan, and I'm being serious here.
Go ahead. Sorry.
Go ahead. You said go ahead. Okay. I'm being very serious when I say his.
I think you're breaking up for me. Can you hear me? Okay.
Yes.
All right. Thanks. I think it's a very partial picture, right? So one. If people remember back when the Data Privacy Act was signed, a comment was made about how it had the potential to create 1 million jobs, both in training companies in compliance and having data compliance officers within companies themselves, right? This week just passed on Friday, the Vice President Global for Google was in Nigeria. There are attempts to create jobs on multiple fronts. However, there's a tendency for people to miss certain things, right? So first of all, let's think about the refinery problem. Nigeria already has multiple modular refineries. We have Bua coming online with 250,000 barrel a day capacity within the next few years. However, we don't produce enough oil, we don't produce enough crude to be able to supply those refineries with crude. If you look at the modular refineries that already exist, that's the thing that they're crying out for, right? So there are some first order priorities before you jump the gun in terms of handing out loads of licenses, because those licenses don't get used. Do you know how many refinery licenses have been given that are not actually ending up with companies being able to refine? Next thing that I would say, in any economy, you need a diversity of job roles available to people. People treat urbanization as a mark of development. But the only reason that China, India, many of these countries have been able to industrialize to the scale that they have is because they're able to sustainably keep wages relatively low. A Carnegie report was released last year about infrastructure-led growth on the African continent. One of the findings of that report was that the average cost of many of the staple items that Africans consume is significantly higher than it is in Asian countries, which means that as a baseline level, our labor costs are higher than they are in many of the economies that we're attempting to compete with. So you can't have a low-wage economy as a competitive advantage if you aren't solving the problem of chronically higher than normal or abnormally high food prices. That's why agriculture is a priority in terms of job development, but also in terms of reducing the long-term cost of labor. I think I've tweeted out that article before, so I'll see if I can put it in the comments of this chat. 1 second.
Yeah, but what I'm trying to get to is that the Tinubu plan involved massive youth employment, printing of funds, decoupling the Naira budget from the benchmark price, and expanding agricultural output. It's in the plan. It's in the Renewed Hope manifesto. I'm reading it. It's right there. That's the point I'm making. I'm not joking when it's there. All what you're saying is correct. Jobs through IT, power sector. But what I've said also is in the plan as well. Is that...
Yeah, but just to add up some points, while I agree with both speakers, I think if you look at the reality, the agriculture, the agroeconomy is facing serious headwinds, insecurity, poor infrastructure, and climate change. There's a recent report that came out in Economist. The tomato is more expensive than gas, petrol.
Yeah.
And that's because if you look at the weather pattern, the hottest month, July is the hottest month on record. And that's why I'm even saying food inflation might definitely make a lot of middle class go into the lower class bracket. Because, see, we've not seen all these optics we're talking about, the president is talking about. The problem right now is that the purchasing power of Nigerians are being eroded at the pace faster than the president is even moving. And that's what I'm saying. While his policies look like it's spot on paper, in reality, you might govern just the amount of people you might end up governing might be lower than your expectation, because what is the value you're getting when your income is stagnant and the cost of food is really shooting up? And what is even worsening it again, like we said earlier, energy cost, crude oil prices is over $80 a barrel. And the Saudis are bent on keeping it that way for the end of this year. And the amount of is going up. So while we are talking about all these manifesto policies, what the president is doing, the reality on ground is that unemployment, Nigeria has the highest unemployment in the world. The companies will definitely reduce their operating expenses in Q3 and Q4 because interest rate expenses has gone up for these FMCG firms. And, businesses are there for profitability and sustainability. So the thing that the president needs to work on right now is bringing out serious head-on messages to the market and taking the bull by the horn. All we are seeing right now is still cosmetics. And you could say, yes, it's 6 weeks, but if you look at the way policies work in reality, is that you have to start firing your cylinders from day one, because how you lay your bed is how you lie on it. The market is very fluid, and we have a very competitive world. Climate change is not waiting for anybody. Farmers lost 200 million naira in Lagos in April. The data is there. 90% in North Central, out of 21 million people, just 1 million people are not poor. 1 million, less than 1 million are not poor. How can you have a kind of country like that? 90.5% of residents in Sokoto in 2022 NBS data are poor. And this is a state that you have a governor that is collecting annual pensions of 200 million naira. So these are things we need to ask ourselves. And investors are seeing all these numbers. So
Okay,
you
but-
can't deceive the market.
But Olumide,
That's what I'm saying.
where I'm going to, and I want to get her name. Where I'm going to, Orekolu. I want to be clear. Are we saying that this policy, because are we running away from the policy? It's a very good policy. You know, I know on Twitter they call them. It's a very, very good policy to say you want to take unemployed youths, train them, give them land, and turn them into mechanized farming. It's a very good policy. What's wrong with that policy?
So the thing that I was bucking against was the idea that... Oh, sorry, was it Akin?
You go ahead, Orekolu. It's you, ma'am.
Okay, so the thing that I was bucking against is the idea that the intention was to create a circular economy, which is not the case.
What's wrong with the circular economy? Sorry.
Increased production has to circulate more broadly, nationally, in order to meet some of our domestic demand, right? So that's why, for example, if you look at the plans around the agricultural sector, a lot of resourcing going to the Ministry for Works and Housing in order to restore some of the access roads to market, which were lost in the flooding. Things like irrigation, year-round irrigation for multiple harvest years, right? These are really important policies meeting domestic meeting domestic demand. And I don't think that framing it as a circular economy, that circular economy already exists. Go to any village in Kogi State, they probably have a patch of land where they're farming alongside their job, right? And that's producing most of the food that they themselves consume. The question is, how do you get the food that ends up getting wasted in farms across Nigeria or in patches of land across Nigeria to the tables of people in urban areas?
Okay, so when I mean circular economy, what's what I mean, right? In a circular economy, say in the UK, for instance, the farmers farm, sell, the households buy from the farmers, the households consume, then the households spend more, which then gets funds to the farmers again, who then farm more, produce, then the households buy, then the households spend, which then gets to the farmers. So the economy is going off full employment or maybe half full employment per se, but what I produce is what you consume, and what you consume becomes my product. In Nigeria, there's a disconnect that there's food in the middle belt and it's very cheap. But food in Lagos, Abeokuta, the cities are very expensive. There's unemployment in Lagos, but farmers don't have enough workforce to farm the land. There is credit in banks in Lagos, but there is no credit for a farmer in Taraba. So there is no connection between the output, the input, the consumers, and the guys that create what's to be consumed. That's the problem with Nigeria. It's all siloed. We're farming in Kogi, but the cassava in Kogi is not creating enough cassava going to ethanol that is going to NNPC, that's going to our cars, as we have in other places. So I thought it was a very, very good policy to say we have unemployed Nigerian youths that are in the urban areas and cannot get a job. We want to take these youths out, train them, give them land. That was the key thing. They said give them land, that they're going to own land. Then we empower them with mechanization and with credit and probably with seeds. They farm. What they produce is then sold. We guarantee minimum prices. They sell these goods to the cities. They create revenues, and with that revenue, they can then train and upskill themselves, even away from the farming into the IT economy and all that. I thought it was a very simple plan, even though it's been abused on Twitter. A rather simple plan that has been tried and has worked in other places. But when we say that's not, what's wrong with the circular economy? It's actually how it's supposed to work, isn't it? It's supposed to work that way.
So, Carlo, the problem with this plan, and you're not really looking at it that way, is that the problem with it is that about a third of the people that work, that are in the labor force in Nigeria, are actually working in agriculture. So, with his plan, he's looking at increasing the number of people that work in agriculture.
What's wrong with that?
No, there is a very big problem with that. The problem that Nigeria has is not that we have too few people working in agriculture, is that we don't have enough mechanization in agriculture. The China that you're talking about, what happened really, and I feel it's something that you're sort of mixing, you're sort of mixing the order of things, is that during the Cultural Revolution, there was already a quiet revolution in agricultural production and agricultural deregulation in a certain province called the Anhui province. When Dong came in and he heard of the experiments that they were doing covertly in Anhui province, they basically rolled it out throughout the country, saying that it was going to increase food production. Food production increased. What then happened was that you had the special economic zones in the southern part of China, close to Hong Kong, starting from close to Hong Kong. And that created manufacturing centers where people moved from the rural areas to the urban areas, and that reduced the pool of labor in agriculture and brought a huge army of labor into the urban areas to actually help in low value added manufacturing. It was over time that China started to upskill and started to go up the manufacturing value chain. What you are suggesting is basically the recipe for basically keeping millions of Nigerians in poverty. Because what will happen is a situation where we have a very labor-intensive form of agriculture that will not be using a lot of modern kind of agricultural methods.
I think you jump.
And if you think that that's going to reduce unemployment, sorry to tell you, it's not going to reduce unemployment in Nigeria. It's actually going to make things worse.
I hear you. I hear you. I can pause. I can just pause. You jumped when you said we don't have enough, then you went into mechanization. The question was, what's wrong with having more people in agriculture? I'm not against mechanization. I'm asking you, you said that he's going to put more farmers. What's wrong with that?
You already have too many people in the Nigerian economy that are in the agricultural sector.
Yeah, what's wrong with that?
A third of people.
What's wrong with that?
You have about 1% of people in the US.
But you're not answering my question.
In South Africa, we have 2% of the population working in agriculture.
Yeah,
do you want to? Yeah, I'm listening.
In my village, I'm from a small poor village in Abia State. It's a village in Ohafia local government. Everybody is a farmer. Everybody is a farmer. When we say we're going to put more people in the farms, the youths in my village don't stay in my village. They go to Lagos, they go to Aba, they leave the village. So the villages are all old farmers and very young farmers. We want the younger youth that will bring in the quality, the educated farming back to my village. How to use fertilizers, how to grow higher yield cassava. That's what we are talking about. You haven't told me why more youths in agriculture is wrong or a problem. You haven't told me why. You've said in America, yeah, but why is it? If 90% of...
It's a problem because you are literally going to just be increasing the pool of labor in agriculture when there are other sectors of the economy that actually need that army of
we are 200 million.
And that is part of the problem where I feel that we're not having a very cohesive and coherent economic development plan. What we should be looking at right now should be manufacturing.
Yeah.
How we're going to ensure that manufacturing, so low value added and high value added.
But again, the point is that, right?
Agriculture.
I hear you. The point is that we can't go from B to Z. We have to go from A to B. I posted on the Twitter chat, guys. Go to my Twitter. But I posted a great book there. It's called China's Rapid Rise: From Backward Agrarian Society to Industrial Powerhouse. If you want to know how China did it, this is the book to read. It's by a guy called Yi Wen. Very popular book, right? And he lists to you how China did it. Focus on the grassroots, bottom-up reforms, starting in agriculture instead of the financial sector. That's what he's talking about. What China did was to go back to rural areas, and they made Ohafia have opportunities the same way Lagos had. So they went to Ohafia and they put solar power in Ohafia. They put mechanized processing in Ohafia. So that the farmers in that poor village would grow cassava, be able to grate it, store it, and export it. So there was wealth in the villages. Because there was wealth in the villages, the farmers stayed back. It's their children that then went to the coasts and then got the jobs at the manufacturing. Nigeria can't feed itself, Akin. We have to import food. If we don't grow the food, we are still going to go to the farmers, the manufacturing places are talking about, and import the food. We still can't grow food. We still grow crops with rainfall. We don't have irrigation across the board in Nigeria. We still farm with no fertilizer. It's still expensive. The very basics we don't have. And this is what they turned it around. Instead of going to the banks, they went back to the farms. That's what they did. They took the young folks, same thing in Cuba, same thing in Russia, same thing in all these Asian tigers we see today. They go back to the farms. And farming is not hoe and cutlass. Look at the Netherlands. That's farming. And that's what we should do in Nigeria. Not the service sector first. But we have to go to the base. The bulk of the Nigerian workforce is in farming. Our GDP is in farming. So anything you do in farming, if you do a 1% increase in farming, you affect more people than a 10% increase in services. I think that's where they are going to. If you spend all the money on services, how many people are working oil and gas? If oil and gas grows by 100%, how many Nigerians is it going to affect? If you have a 1% growth in farming, 1%, millions of Nigerians could leave poverty. I think that's where they are going to. Ayo, hop in here. Ayo, I've got Ayo in here. Ayo, how you doing? Go ahead.
Yeah, hi. Good evening, everyone. It was because of Akin that I able to come to the phone, but I think you have done a good job. Okay, because I walk around and I do a lot of traveling, and just to see some of the effects, especially when you talk about agriculture. With these results, we don't see them maybe because we live in the cities, and what really concerns us are not the basic forms of agriculture or agriculture generally. We're looking at jobs in oil and gas. We want to work in communications and things like what happened in the agricultural industry, a bit pedestrian to us. Let's take, for instance, a good point you made about us not being able to feed ourselves. 2015, our rice national output was about 3.7 metric tons. As at 2022, we're doing about 8.4, 8.5 metric tons of rice. And total consumption is about 7.5 metric tons. That means we're not producing more than we're producing more than we're consuming. So, but imagine if we weren't doing that, we still kept the national output between 3.7 and 4 million. Like you said, we would have had to import the difference. Especially now that we have global rice shortage due to like climate change, bad farming, and India not exporting rice at the moment, partially because of the war in Ukraine. So those are the kind of challenges you would have if you move away from agriculture. Let's also go to sugar. Under the National Sugar Master Plan, which has been revised twice, now you have a backward integration program mandated by the National Sugar Development Council under the National Sugar Master Plan as well. So you see Dangote that is farming in Yola Numa about 6,000 hectares of land under his backward integration program, but they're presently doing about 10,000 hectares, and already they have 8,000 locals employed under that scheme. And if you go to that farm, mostly the average age you find on that farm, apart from the C-suites on that farm, are between the ages of maybe 25, 30. So they have their laboratory, they have their soil science department, they have all these high-tech, facilities, basically filled with very young people. Then you have the outgrower programs where you have like the locals coming, doing all that growing and all that, empowering the community. And because of that, you have hospitals, you have schools, you have all of that going on in that place. So if you until I got to that place, I did not even think that such civilization could happen in Numa. But lo and behold, so people like there don't even need to come to Lagos because they have this huge sugar community that is empowering the people in the community. Also at Tunga, also with Boa, also with Flour Mills, Golden Penny. So they have huge backward integration programs. Now, sugar has moved from domestic production, where we used to do barely about 49,000 tons, to about 1.7 million metric tons. And that was, about 49,000 tons. Our consumption was about 1.7 million metric tons. Presently, we're doing about 3.7 metric tons. So, of course, but that is not due, that's our refining capacity. But by the time we harness the backward integration program, substitute it with importing raw sugar, imagine the number of people they are going to be employed in that industry. And of course, over 50% of the food and beverage sector are the ones that consume over 50% of the sugar we produce in Nigeria. So look at that manufacturing chain. Look at the rate of employment it's creating. So, like you said, if we really need to get out of this thing, we need to go back to the farms. We need to empower the rural areas, get them into farming, find them, useful in these areas, mechanize farming in Nigeria. Under the Odobe administration, they did an extensive soil map of Nigeria to determine the kind of soil we have across Nigeria. That the next thing, like you said, cheaper fertilizer, NPK, urea, DAP, and all of that, so that we can boost, productivity and get the amount of yield per hectare in our agricultural space. So it is very, very key. And while products are coming out from the farms, I'll go to other manufacturing sector. So it's all a value chain, and maybe Aki is correct, or was it Olumide, to find a very complete, cohesive policy to ensure that everything can work together, and grind together for us to be able to get to the promised land. I just thought I should add that. Thank you.
All right, guys, and I'm going to let Kirkus, but guys, let's not forget the topic, right? We're trying to talk about devaluation and how it's affecting, I would say, the stock market, but also the economy. So this devaluation, Olumide, this is your question, Olumide, right? All this talk about agriculture, where should we look now in the stock market? We've got, of course, the Okomos, the Prescos. Should we start to look at those guys now as viable outlets to channel funds that are going to take advantage of this agricultural spread? William, that's your question. I'm coming to you. But let me just ask Orekelu, I think you were trying to speak and we cut you off. So go ahead and give us your own perspective, just to round out this agri topic before we move on. Go ahead.
Okay, no worries. So, firstly, I think whenever we look at other countries, it's important to recognize what the features of those countries were at the point of their development, right? Nigeria is relatively unique in that around 50% of our population is under the age of 18, which means we're going to have massive numbers of people over the next few years entering the job market. And how do you hoover up those jobs? Many of these people are rural. Many of our children are rural, right? Many of our children don't necessarily have access to the standard of education presently, which will allow for them to do skilled labor. We have to improve that situation, but that's the reality. And so I think sometimes it's easy to talk in like hypothetical terms about development, manufacturing, all of that kind of stuff, without realizing what the actual conditions Nigeria is faced with are. I would add this. The fact that many of our companies, especially our packaging companies, are not able to domestically source their raw materials tells you that with the number of people presently in the agricultural sector in Nigeria, we don't have enough to meet the demand. Very simple, right? But we add to that the fact that for many of our competitive, as a state, if you're looking for your stance in the global stage economically, you have to think about what your competitive advantages are. Much of the manufacturing in which Nigeria would have a competitive advantage, the key inputs, are agricultural products, right? And I think when people think about agriculture, they just think about corn, or they think about cassava that will end up on somebody's plate. But there are so many different ways in which you can add value to agricultural products such that they actually end up selling for much higher than the amounts that we sell raw materials. So I think that's another area that the government needs to focus on. But all of this requires ramping up our production. I'm done.
Excellent. Let's bring you back, and I asked you a question about how all this agricultural talk, right? Where should we be looking at? I'm looking at the Okomo. I'm looking at the Presco on my chart here. Is that a good place to look at, or should I go somewhere else? Should I look at Julius Berger that is now exporting? Is it cashew? Where should I look at if I would like to invest in that space? NGX is always on my space. Sorry, the guys from AFEX. Right, and if you don't know, guys, AFEX Commodity Board doing a great hidden job in Nigeria to link this markets of the producers and the guys in the warehousing to create a market OTC for agricultural products. So, Akin, where should I be looking at, really?
Yeah, I'd say agriculture is a big space. First of all, because there's a lot of policy direction towards agriculture. So that means that there's more money that's going to be flowing there. Then also, if you consider that that's one of the strongest inflationary pressures in the economy is in the agricultural space. That means that they will probably be able to raise prices. As a previous speaker said, there's some pricing power, especially for the big integrated farms in the country. So agriculture will be one. Then I would also be looking at a construction sector, because there's going to be a lot of investment into construction to like building of roads and the like. I'm not going to make specific, or I'm not going to say specific companies. I guess it would have to depend on the strength of their balance sheet and their financials, generally speaking. But construction, especially constructions of roads and of buildings and those types of that kind of construction. Maybe not construction of residential buildings, but roads and let's say big government installations or big government buildings would be one. Then I would also say that maybe the pharma sector, but then it will also have to deal with the whole thing of financials of the company and all of that. I think any recommendation that is going to be given with respect to stocks, so people have to look at the financial statements. Don't just take what people say at face value, because even if there is a policy that is buffeting a certain industry, is increasing a certain industry, if a company, or if there are companies there that are weak financially, they would not be able to take full advantage of the increase in that industry. So in the pharma sector, I know that there is some sort of backward integration and local production of a lot of medicines. So that can also be a source of returns for investors. But the problem, of course, is that the devaluation itself means that if you come in at even an 800 Naira to the dollar, by the time you leave it there and you have returns of about, say, 20% per annum, and then the Naira is falling, give or take 15 to 20% per annum. When you repatriate your funds back to your country, you would probably realize that in dollar terms, you've not really gained a lot. So those are the inside out, and those are the back and forths.
All right.
And that's why rapid currency devaluation is not always a good thing.
Yeah, but if you don't, again, this is my. If you don't devalue, then you don't support the exporters. If this same point you've made, if I was exporting cocoa, and I sell my cocoa, and CBN says they're going to pay me 468 Naira for every dollar I do. Why should I waste my time and go to the field and farm cocoa for 468 to a Naira when I can do the exact same thing, same crop, and sell for 800? So no farmer will go to the market and there will be no incentive for increased output. This is the thing. Okay, if you don't devalue, when you say devalue, you are simply making the prices react to the market. That's all you are doing. The price of Naira is not 400.
So the thing is, I actually support devaluation. I just think it's the speed and the scale that
It's the support. The speed and scale are fine.
The thing is, if you are an exporter, you also have input costs. For a lot of manufacturers that I have been privy to talk to, and I've heard things about them importing close to 90% of their inputs. So if you're importing about that percentage,
why would you import 90%?
Your inputs are your input costs are rising so fast. And
but
in the world market, when you're selling it,
let's speak realistically. Crazy. If I'm a cocoa farmer, what am I importing? Tell me what I'm importing. If I'm a cocoa farmer, what am I importing?
Oh, you're importing fertilizers, NPK.
Yeah, but Dangote has fertilizers and everything has fertilizers now. Dangote has fertilizers now. Notori has fertilizers. They're all quoted.
So Dangote is selling urea. He's not selling the full NPK. Nigeria still imports a whole lot of NPK fertilizer. Because I believe phosphorus is still being imported from Morocco. I think Morocco is the biggest producer of phosphorus.
Yeah.
So we don't. And because of the changes in because of the devaluation of the Naira, it also increases the cost.
But is that 90%?
Local
is that 90% though? 90% is saying that everything is imported. Is that 90% though? Just asking. I can not just asking. Just asking. I just think it's a high number. Olumide, hop in here. I mean, what's your take, Olumide? We've talked about agriculture a lot now, Olumide. So if I was an investor in this space and this whole agricultural talk is leading me to look at them as a possible hedge, because I'm exporting shea butter, cashew nut, I'm exporting even the NPK, the urea fertilizer. What sectors should I look at, or what particular stocks touch your eye, Olumide, in the Nigerian agricultural space? Let me leave with that question like that.
Yeah, so this is not investment advice. This is just for educational purposes. A very tricky question, Carlo, because the stocks you mentioned really they've done impressively. Look at Okumo, for example. Year to date is 60%, and I always follow this Warren Buffett saying that we often know the price of everything, but a lot of people don't know the value. So of this asset. So me, I'm more of technical. I look at the RSI, I look at the moving average, and I look at the candlestick pattern. So I also look at what the big boys buy most of the time, because Nigerian stock market is definitely by wheels. So one of my favorite indicator from the NGX is the NGX pension index. This is a composition of stocks based on their weight of where most of these pension guys, the stocks most of these pension players buy. So if you look at the stocks right now, and you look at their year-to-date performance based on the very liquid ones, you see that for me, banks are out of it. Look at Transcorp already. Transcorp has done more than 200%. So is it that Transcorp will not do another 200%? Well, I'm not saying that, but it's highly unlikely we see that stellar performance that we saw repeating itself later on the year. So I'm really looking at those that really didn't do too well and really have strong fundamental. Well, if you look at on the list, look at the worst performing on the pension index, it seems to be Airtel Africa. And they were heavily exposed to the FX stocks. I even explained that they had a dip of, I think, $451 million. And if you look at how it impacted on the bottom line. So also considering the fact that the management spoke about infusion of capital to the Nigerian economy long term. They met with the president during when the president started his administration. So they spoke about the fact that they were going to invest. The chairman of Airtel spoke about the fact that they were going to invest billions into Nigeria. So I feel that Airtel, at the present price, it looks like anything around between 1,000 and 1,002. It seems to be quite fair. But if you look at Nigerian breweries, also Nigerian breweries has a year to date, because the cascade that happened this week turned Nigerian breweries to a negative yielding performance. So it has a year to date of around 7%. Yet this year in yearly return is down 18%. So the problem with Nigerian breweries is cash flow, and the fact that with Nigerians be drinking as much beer, where food inflation is really going out of hand and erosion of capital, it looks like another COVID is playing around. Because the last time we saw this cascade of losses was during COVID, where Nigerian breweries and Guinness Nigeria posted terrible results. So for me, I think it's a stock that for long-term buyers, they should take a look at. But please ensure you talk to your stockbroker. Nestle, Guinness, also, they have negative year return. So me, I still see value in those stocks. Definitely, Blue Brand, Guinness definitely has high entity exposure. So at some point, you see the parent company really buying or taking position. So wherever that stock, I think that I'll pretty much be on the watch for it. But for banking stocks, Carlo, if you look at banking stocks, I think this time we've always forgotten, because you see, we were quite critical about Emefiele, about the fact that yes, he criticized the bank and little sympathy and things like that. But the reality is that a lot of investors, particularly from LPNH, First Bank, are highly thankful, because if you look at the non-performing loans improvement in First Bank now has NPL of below 5%. In fact, at some point, we were thinking it was going to go to 10% during the Awoshika era. And Adeshola has done a beautiful job in making with the present group CEO Nnamdi Okonkwo, they've done a beautiful job in turning their treasury to a money spinning machine. So we are seeing something like JP Morgan in our Nigerian banks. So I think that's another good indicator. But my favorite of them all is Nneka, because I think she's just not being celebrated. Nneka has turned Fidelity to something else. Look at the stock in the last 3-4 years alone. I think investors have a lot to spend, and that's what is significant. And that's what I've been telling the Nigerian fintech brands. See, corporate governance and your personality matters a lot. This is a woman that has spent most of her years in different banks, and she has brought in her expertise quietly and turned the bank to something that looks like it's going to be a tier 1. But before I drop the mic, I also want to talk about Wema Bank. Look at Wema Bank also. The alert has really caught my eyes on. Look at non-interest income and the fact that this is a bank that at some point was even trading at 60 kobo for a while, but now look at it, it's looking like it's going to be a medium capitalized stock. So I think for me, investors should really look at the board and how the performance over years with the personality on each player, because it has really shown on the price of those stocks. But in the longer term, I think value also is very important. So on the technical, the stocks I mentioned, that have not done so, I think they seem to be a good bargain, because I don't see the likes of Dangote, for example, doing a 600. So the Dangote this year has done 21%. So I think it's going to be at its peak at 350. I find it very difficult breaking above 350, despite the fact the stock is highly concentrated. So that's my outlook for Nigerian stocks.
Let's talk about Fidelity Bank. Fidelity Bank, 1 month return 22%, 6 months return 53%, year to date return 96%. Shares float is about 28 billion, not bad. Dividend yield 5.88, which means if you buy one share of Fidelity Bank, you get about 5.88% in return. Price to earnings ratio 4.72, which means if you buy one stock of Fidelity, it takes you 4 years to make back your principal. It also tells you how expensive that share price of 8 Naira 50 kobo. You are buying it at 4 times the earnings. It's not a bad proposition to buy this mid-table stock. I'm not making a recommendation, but I'm just going off the numbers that you were quoting, right? Looks interesting. I always
also have good exposure in the telco. In the Nigeria power sector. If you look at the fact that most of they made deep investments in that sector, and if you look at the upside coming from the sector in terms of future investment and the president's priority, to be an Achilles heel betting against Nneka's bank. So for me, I think what investors should really look at is the price to enter, and look at speak with their broker for direction and things like that. The woman has really done an awesome job. I was so happy when Bloomberg did an article on the woman's. At some point, it was the best performing banking stock in half year. So the woman needs to be celebrated. Yeah.
Got you. Let's get Dimeji in here. Dimeji, what's your thanks for hanging on with us so long? Dimeji, go ahead, sir. Dimeji, you guys could be ready to go. Dimeji, do I have you? Daniel, got the floor. Go ahead, sir.
Yeah, thank you very much, Mr. Kalu. Happy Sunday.
Hey, how are you doing?
Yes,
sir?
I was listening, right, when the talk of agriculture, South Africa, the comparison, came in. So I just wanted to drop my 2 cents on that.
Okay.
You see, number one, we need to understand the way different economies are configured as reflected in their GDP. South Africa, what is the contribution of agriculture to the GDP of South Africa? Under 3%, 2.something%. If you come to Nigeria, agriculture accounts for over 25%, right? Followed by trade. Agriculture also, of course, dovetails into trade because it also affects trade. So anything you do to agriculture, as Kalu said, you are going to be affecting a lot of people. Let me also say, 70%, according to Nigeria Bureau of Statistics, 70% of our population live in rural areas. 72% of those 70% are poor. So your rural poverty is very high. Now, you now have on farmed land about 60-something percent. So anything you do to agriculture, number one, you're going to be lifting people out of poverty. Let us also remember, food accounts for about 55% of what an average Nigerian spends because we are not producing enough. So we need to understand how our economy is configured, how our population is configured before we start comparing ourselves to countries like South Africa. Even China learned a very hard lesson when Mao wanted to industrialize too rapidly, moving people out of farms. That resulted to the great famine that we all talk about. So in Nigeria, right, we are not industrialized, we are not farming enough, we are spending too much on food, and we are poor. So that is about triple whammy, right? So it's very important that we understand that the importance of agriculture in improving our economy, lifting people out of poverty, and even reducing our inflation. Yeah, thank you very much.
Good points there. Good points. I mean, it's just the maths of it, right? If you do 1% of 20, you get more than if you do 100% on one, right? Just the maths of it. I get you. Ikechukwu, you've got the floor, sir. Go ahead.
Yeah, good evening. Please, I would want to ask a question pertaining to agriculture. Now, I've been listening, I've been following up on everything you guys have been saying, but I think we've shied away on the importance of, or rather, the effect of insecurity on agriculture. Because, Bakalu, you were of the opinion that the plan by the government to encourage people to go back to the farmlands is really very crucial. It's really very important. It's really very welcome and very true that it's what it is. But I think we've been, shying away from the fact that insecurity is really very important because I was just going through Punch newspaper a few minutes ago, and there were reports that about 40 farmers were, abducted in Kaduna. 40 farmers were actually abducted in Kaduna, and some other parts of the north. We keep hearing about insecurity.
There's nothing new there.
The big question is this, because I'm not an economist, basically. So, is insecurity not really, affecting agriculture in Nigeria at the moment? Is it not really affecting?
I think it's an obvious answer. It's an obvious answer that insecurity is the one reason why we don't have output as we should be, right? We all know what's happening in the Middle Belt. I think that's why I heard the administration talk about putting food security as part of the defense policy or something like that. They've made food security as part of what the Army and the Navy would do. So again, I've tweeted this before. The number one thing they need to do for 90 days, import food. Why? Because they're going to send the military to go into the entire farmlands in Nigeria. And just anybody you see, take away those guys out so that you take away the insecurity in the Middle Belt where the food comes from. So 90 days, you replace the loss of food from those places with imports. Then hopefully when the military has done their job, then you then do the medium term, which is now to encourage the farmers with fertilizers, with new seeds and all that for the next farming session. Because this farming session is more or less, you're going to be taking out folks that are not supposed to be there. There's got to be security in the hinterlands for farmers to grow food. And even if the farmers grow food, there are no roads, there are no storage, there are no post-processing. So that is all the medium to long term to get that done. But the point we are making is that the focus has got to also be in agriculture because the bulk of the Nigerians are farmers, the bulk of them are in the rural areas. So any focus any Naira you spend there goes further than Naira you spend even in the cities. That's just the point we're making as regards that. All right, you go. Simon, you've got the floor. Simon Obasi, go ahead, sir.
Hey, yeah. Hi, Carlo. Thank you very much.
Hey, what's up, man?
Yeah, very well. Olumide has really done a lot on this conversation.
Yeah.
Thanks to everybody who's spoken. I think what I want to do is just to go back to the FMGC conversation. FMCC conversation, right? And which is the crux of the whole conversation this evening. And then to share some of the findings, observations I've made looking at a whole number of financial statements over the last few days. Particularly, I want to use two pairs of four companies and compare them side by side. For instance, take for instance Nestle and USC. So I'm going to compare both companies and then also compare Dangote and Bois Cement. So these two companies, I mean, we can say they largely play within the same market space, right? So look at Nestle. Some of my observations are based on comparing both their 2022 results and 2023 H1, right? So because there are certain information that you won't get in 2023 H1, so because of that, I have to do those comparisons looking back. So look at Nestle. In 2022, Nestle had a total loan portfolio of about 155 billion. Of the 155 billion, about 147 billion of it was from the related parties, right? So just only 8 billion was from whoever, right? The same is the case in 2023, H1 2023. What you will say is that they only got additional 10 billion from the related parties, I think, but loan balance has actually moved. So if you look at the 290-something billion that they have at the end of 2023, you see at the end of H1 2023, you see that, I mean, of that balance, about 264 billion or so is to related parties, and the impact is actually that of revaluation. So what you will notice is that of the whole revaluation of about 137 billion that they have in H1 23, only about 20 billion of it is tied to trade payables, meaning that all of the other parts, about 118 billion of it was actually coming from their interactions with their related parties, which are, I mean, priced at maybe LIBOR or whatever rates, and so on, and all of those things, plus some of them 8%, and I mean, certain rates, right? Now, when you situate it with a USC, you will notice that of this, about 15-16 billion USC loan portfolio as at H123, right? Just probably about it's, I mean, very tiny proportion of it is coming from FX loan. So I'm trying to say that if you position these two companies, one company is highly FX dependent. That's their loans are highly FX dependent because they have a lot of interactions with their related parties, which I think is one of the ways that they are trying. I mean, in their capital structure, they try to make sure that they are able to export cash, sufficient cash, to whoever their parent company is. I think that's probably the structure that they have. But for the USC, they have a very thin, FX exposure, and because of that, so it kind of makes sense when we say, oh, they had a positive FX gain. Now, I mean, they had an FX gain. Whereas the other competitor, which is Nestle, is having 137 billion, out of which 118 billion of it is tied to the loans to external parties, which are largely over 80-90% of it is FX, right? FX loans. Now, let's go back to Dangote. Dangote on its own, if you look at over 700 plus billion that they have in their financials as loans, about 300 plus of it is FX. Go to BUA, you will notice that you hardly see any loan. It's probably about 10 to 18 billion I mean, you won't hardly see any loan in BUA. Probably about maybe 10 to 18 billion is FX loan. But they have significant exposure, significant loans as well, right? So what I'm trying to say is that the entities, the way they've tried to structure their capital structure actually led to some of the impacts that we're seeing. So entities who have local exposure, who got loans from local markets, they are reporting very little or very tiny FX exposures, except for those ones that are related to imports, which, I mean, from all of the analysis I've made in the last few days, it's less than 20%, right? So to a large extent, I think this is a conversation I've had with a lot of people in the last few days, which is saying that if entities can understand that you are dealing in an unstable FX environment, then you need to tilt your capital structure to also reflect that. So if, for instance, you know that all your income is coming in Naira, and you're bloating your capital structure with a lot of FX exposure, the impact is that if things like this happen, you're going to take the beating. I mean, there is no way if retained wiped out, right?
True.
So a lot of this is actually as a result of probably some of those capital structure arrangements and taking a lot of FX loans, right? Where probably they would have taken, maybe gone to the capital market, maybe they gone for commercial papers, or look for maybe some of the banks that can offer them maybe some kind of competitive rates. Because from even what I see, I mean, LIBOR is probably almost 18%. It's almost 5.8%. I mean, depending on whatever if you do 3 months or 6 months LIBOR, you'll see probably 5.4 to 5.8%. And you see at these companies, they are even having LIBOR plus maybe 8%, which takes them to almost 13%. Now, if you are in Nigeria, maybe you can get 18, 20, 22%. I don't know what rate it is at the moment. But the reality is that if you think about the impact of some of these FX losses, you see that the gains, those gains for which you went to get FX loans will most likely be wiped out.
True.
So effectively, what I'm saying is that entities need to be able to look at where their revenue is coming from, what currency your revenue is coming from, and try to see how you can manage your FX exposure so that if there is any adverse impact, it does not entirely kill you. I mean,
Simon, let me ask a question. Let's do devil's advocate, right? So the past Minister of Finance, that was the lady. Oh my God, her name escapes me. The one that left the country. The lady that was under Buhari. The lady that the NYC scandal.
Yeah.
Kemi Adeosu. Kemi Adeosu basically advised the federal government to take loans in dollars because it was cheaper. That was the pitch. So we moved our loans from the local Naira to dollar because it was cheaper, i.e. the cost of the loans were cheaper. And when she gave this advice, US loans were 0 to 1 to 2, i.e. they are prime. So to us, if we do prime plus, our risk margin is still lower. And that's what many Nigerian companies did, right? They did these loans in dollars because it was cheaper. Nigerian banks are asking to pay 26% APR on a loan, but the foreign banks, you would pay maybe 3 plus your risk, like LIBOR plus your risk premium. So in hindsight, we are now seeing that borrowing in dollars to invest in Naira, to earn in Naira and convert to dollars was a bad idea. That's what we're seeing.
Yeah, to a large extent. So if you notice, you see that, for instance, when Kemi advised Nigeria to do that, Nigeria earns both Naira and dollar, right? I mean, from sale of food, you earn dollar. From collecting taxes, you earn Naira, right? So there's some level of balance that Nigeria will have as a country.
Good point.
Right? Yeah. Therefore, these entities, there's hardly any FX inflow. Like there's hardly any FX revenue that you do have, right? Unless maybe some of them that are selling that sell to. I mean, what proportion of really the revenue they really sell to, cross-border to our neighbors across the West African region? It's very, very tiny if there's anyone really that does that, right? So, I mean, when you think about it, you see that at the time when Kemi gave that advice, you will notice that even the NPR, the PLR, the prime lending rate, probably is about maybe 10-12%, right?
Gotcha.
Which wasn't a bad rate.
Gotcha.
You get? So, I mean, at the moment, maybe it would have moved up, right? Well, it sure would have moved up. But when you stick to it, because it's easier for you to price in, some of those risks in your products, right? Than having to wait until you have a massive, something that is going to hit you and you don't know what to do.
Okay.
So that's the first part. Now, the other thing I want to talk about, which I think a lot of people have actually said, but I kind of worry. I have heard many people say, hey, that, I mean, these are paper losses, accounting losses. It doesn't have any tax implications. See, let me try to address it a little, right? First is that, let me start with this whole tax problem, right? At the time when you are incurring these losses, if you look at Nestle, if you go to Nestle's H1 result, you see there's a part that they call realized exchange loss. There's a part they call unrealized exchange loss, right? So at the time you're doing your taxes, those parts that are realized, I mean, they are it's actually a loss to the government more or less because, I mean, they have to, it's tax deductible.
Okay.
The unrealized parts will at some time crystallize unless and only if these If the rates don't go back, those losses will crystallize.
Become realized.
Sorry?
They become realized.
Exactly. They become realized because when you pay those, I mean, you have to go and substitute your dollar anyway, right? Wherever you see it. When you pay those amounts, it becomes realized. And then you have that's your benefit. I mean, whatever you call it, you decide to call it a benefit. But the implication is that even the government is going to lose, right, in form of taxes over time. So let's not try to say, oh, it is accounting losses and all of those. No, these are real losses that can only come back if and only if the rates change.
Interesting.
Now, think about it. Look at Nestle. Where will Nestle pay dividend from?
They won't. Nestle, they won't.
No, exactly. Because you can't pay dividend from negative retained earnings. You can't pay dividend from it. That's our law. So the impact is that it's even going to hurt the investors, the shareholders, the existing shareholders. They have to wait until this company is able to recoup all of these losses and then start paying dividends.
Let me give you the numbers. Earnings per share for Nestle today is minus 26. Minus 26. There is no PE ratio for Nestle. No PE ratio for Nestle. Beta is minus 6. They are 6 months. They are still year-to-date gain 6.82%. But your earnings per share is negative. You have no PE ratio. You have the negative beta. Man.
Exactly. Yeah.
Wow. So let me ask a question to everyone here. Olumide, all of you listening here, like, what does that FX forward market on OTC work? If you know, answer me. If I would have, why didn't they go there and hedge? Does that market work? The FX market that we see on OTC that FMDQ publishes, does it actually work? Can Nestle go there tomorrow and say, okay, we don't want to pretend, we're going to just go and hedge forwards for 3 years? Can they actually buy there?
It does.
It does.
In reality, it does. But the forward market in Nigeria is not like what we see in the United States, United Kingdom, or other emerging markets. You're talking about liquidity here. And, yes, I agree with the last speaker that he was saying that some of the CFOs, if you remember what I said the CFOs of MTN and Dangote Cement had earlier positioned themselves through corporate bonds, going to the debt market, and that really reduced. But see, it can't work for all companies, let's be honest. Because, see, some of their products are dynamic. Nigeria is import-driven, for heaven's sake. And some of their liabilities, at that time, it was cheaper for them to get their loans in FX and more suitable. So you could argue the fact that, because it went against them, you said they should have. But if you look at Nestle, for example, in 2022, the same half year, they were profitable with over 7 billion naira. So what really happened? It was definitely the FX exposure that really
6 months ago, their stock was up 8%. But you see, Olim, this calls to question. When Tinubu made that comment and all that, the next Monday, the whole week, the comments on social media was that the market is responding to Tinubu's economic whatever. The market, that was a narrative that
I got that for it now, because you see, the sad part about that's why for a lot of people that understand market perception is that, yes, the president's speech triggered the continuation. The rally had already started. If you look at the graph, the rally has started, and definitely because of that statement, it meant that there was perception that foreign portfolios investors would come. If you look at the data, foreign portfolios started uptick.
But they are back. They are back.
But it has not been so impressive.
Yeah,
it hasn't been so impressive. So the question right now is, are we seeing the much needed yield from that statement? The answer is no. Why are we not seeing that statement? Why no? Because foreign investors are quite aware that these things look more cosmetic and there are underlying problems in the Nigerian economy. And that was why I was telling people that, see, the market signal, if you look at the market signal, look at what happened when Emefiele, that drama, NPC drama, look at when, usually when you increase NPR and you tighten the asymmetric corridor, setting the market muted. Why did the market mute? Bank stocks muted. That was a statement that, see, we're not really impressed by because it's unspeakable that the central bank of your country will make statement and the market will not react. I've not heard it before. It's either the market react negatively or positively, but this was muted. So the question what I wanted to say to the last speaker is, yes, I understand some of your analysis spot on, but you have to understand the limitations the CFOs have in a country like Nigeria. I, for example, if I want to move most of my money from one market to another, particularly from Nigeria I use swaps. And most of the investors I use swaps with are sophisticated investors. So I use trying to tell me, because of my my connection in this space, the average investor might not know investors willing to take asset swaps or forward. So how do you make those? So it's really a very complicated scenario. So I think it's
Olumide and Simon, right? What was the problem? Was it the removal of subsidy from the PMS or the subsidy from the dollar? What really caused this carnage we are seeing? Because I just posted on Twitter, if you go on Twitter, you see the results.
I think we have not even seen the impact. That's why I'm saying that we are just complaining about what we are seeing. Most of the end results we are seeing is FX exposure.
Yeah. So let me give the rundown.
We're going to see energy cost in Q3 and Q4 because MEN is complaining. They're already complaining that 30 to 40% of their operation cost is energy. So that has not even translated on their expenses. So So I'm looking at the end of the year when I'm going to see how a company like Dangote, I've forgotten what Dangote spent in Q1 on energy. We're going to see it's definitely going to almost double because the cost of energy in general it's not definitely what we're having right now. So a lot of investors are not even factoring, a lot of people are not even factoring that. So let's remove the political shenanigans that the market is reacting because of the president. The market was bound to, yes, there was a trigger, there was signs, but the reality right now on balance sheet and statement and the devaluation and the true value of the Naira tells you that you are not really getting the real return. The someone that invested in even just let me give you a conservative stock in the United States, someone that invested in Wells Fargo or Morgan Stanley, the return this person is getting is ignore the 100% or 200% because when you adjust inflation and deny devaluation, you see that you're almost up, and that's what the foreign investors are looking at.
So Nestle is 123 billion forex loss. Dangote 103 billion forex loss. Guinness 45 billion forex loss. Nigerian breweries 85 billion forex loss. Airtel $471 million forex loss. That's $471 million forex loss. Okay, Leke, I've got you back here. What's up? Ore Kilua,
Oh, sorry. Alright, so a couple of things I wanted to say. The first thing I wanted to say is to the comment about hedging and considering the potential risk of FX exposure, you also have to recognize that the base interest rate in Nigeria is around 18%, right? Which is significantly less competitive than most lending than you would be able to get for lending in most places outside of Nigeria. So there was also still an opportunity cost, and I don't think people anticipated the level of depreciation at the speed at which it received. That's point one. Point two, I think also, let's contextualize this thing. The FX losses didn't start with the flotation of the Naira. IATI, earlier in the year, released a report saying that of all money owed to airlines around the world, the Nigerian government accounted for 40% of failure, the amount of money which governments had failed to repatriate, right? So we had airlines leaving Nigeria, not because it was a hostile environment in terms of consumers. We have some of the most lucrative routes in the world, but because we just didn't have enough FX to be able to give to them, right? And so if the proportion of the demand within your economy that you can actually service in the official market is vanishingly small and getting even smaller, then whether it came through flotation of the Naira, these FX losses were bound to start hitting companies much quicker than people are actually acting as if it was going to happen. So I just wanted to offer that.
All right, super. Let's get Ades. Let me see if I get the name correct. Temi Adesadare.
Yeah, Adesa.
So I apologize. Yeah.
Yeah, cool. Really nice to be on this space. Great. Carl, I've been following you, so I'm really glad that you run the space. Just a few questions from me. Are we doubting or questioning these policies? In my opinion, this was always going to come. And any CFO that has not prepared for this change, for the FX devaluation or subsidy removal, then it's their fault, right? This was always going to come. It was always what everybody knew had to happen. All the president candidates talked about it, right, since last year, right? So organizations and CFOs, they should have planned for this, right? And whoever failed to plan for it, I think it's just their fault. That's the first thing. The second thing I have is I actually don't quite get why the CBN keeps increasing the MPR. I think it is. Someone saying something?
No.
Okay. I think it is counterproductive. Like, for instance, I can understand why you would increase MPR to reduce inflation in the US, because about 60% of the debt in the US is to households, is to consumer lending, right? So when you increase interest rates, you basically, it impacts consumer lending more than supply. So demand is affected, and then that would definitely reduce inflation. In our case, we virtually have no consumer lending at all, right? So interest rate directly affects production, supply. So, and it's a major factor, it's a major cost of production. So increasing interest rate basically just means you're increasing the cost of doing business, of producing things. When you increase interest rates, production is, every single unit becomes more expensive. Plus, you actually get to produce less, right, with the same capital, right? And so it's counterproductive to supply. I don't see how it improves inflation. In my opinion, the CBN should actually just be keeping interest rates. If they cannot reduce it, they should just be keeping it fixed. And if anything at all, to fight inflation, why can't they just stop printing money? Why can't they just stop increasing the money supply? If we borrow dollars, then use that dollars to mop up Naira. Don't print or reduce CRR to do that.
Yeah, I think it's just to really quick. CBN is monetary, and they fight inflation by using monetary, i.e., money. Either they increase money supply or reduce money supply. So to them, when there's inflation, they have got to reduce the amount of currency in circulation by increasing the monetary policy rate. That's what they are set up to do. You can argue,
but actually,
we got to move on.
The monetary policy rate does not change the money supply. It just
does.
makes it more expensive.
That's how it changes it.
Volume, right?
That's how it changes it.
So there are two things.
No, that's how it changes it. Let's not debate. It changes by making it expensive. If gala is expensive, you don't buy it. That's the whole idea, right? If it's cheap, you buy it.
I think there are multiple instruments there. There is the fact that there's a volume of money that you have in the system, and there's a cost of that money.
No, but
so don't
make it complicated. Don't make this complicated.
Because if I borrow at 20%, that profit is still part of the supply. It goes to the bank that I'm borrowing from, and it goes to the CBN.
No,
so
but
if
like you are,
I'm reducing money,
don't make it complicated. An SME, let's take it to the granular level. I go and borrow pure water to sell every day. Then I make a return. I pay myself. I pay the guy that borrowed me pure water. If the pure water guy charges me 10 Naira before I borrow that pure water bag, I'll borrow less. Monetary policy makes money expensive or cheap, and that affects the desire to borrow. If you can't borrow credit, you can't spend. That's the whole idea. Nobody has enough cash to run a business. You need a line of credit. If they make lines of credit expensive, it reduces the usage. It's economics. Anything you make expensive, the usage falls. That's what they are doing. It's to say whether it's volume or cost is immaterial, really. If they increase the price of gala, less people will eat gala. Abi? Okay.
There are multiple metrics there. There's volume, there's cost, and there's also velocity, right? So My point is that to think that they have the same impact is probably where we're getting it wrong.
No, why not?
I don't think that has the same impact.
You are going far. That's what you are going far.
If you look at your money supply, M2, whatever it is when you look at it, just look at M2 for instance. Increasing interest rate doesn't change that value.
Yeah, but you're going far, my brother.
I'm not going. I don't think it's going
far. The trader in Alaba wants to go and import air conditioners from Japan. He goes to his bank. They say you're going to pay 20%. He will throw 5 containers. If they charge him 50%, he will throw only 2 containers. That's it.
Exactly.
He doesn't know volume. He doesn't know impact.
So what you just said is actually what the problem is, right? So the gala is producing. So I'm producing gala, right? And there's demand from a gala. Now because the interest has increased, I can instead of producing 4, I can only produce 2. So
No. If you are producing gala and you are borrowing from the bank to make gala, and your bank doubles your interest rate, you can't make as much gala.
Exactly. So I reduce the quantity produced.
Correct.
If my demand is supply is reduced.
Then what do you do to the what happens to the price of the existing gala? What happens to the price of the existing gala? Would you take it up or down?
I have no choice.
To take it up or down?
Even if I keep it the same.
No. I'm asking you a question. What do you do? Do you take it up or down? The price of the remaining gala, up or down? What happens to the price?
I should increase it.
Of course, if you increase the price of gala, would you sell more or sell less?
I will sell less, but I make
exactly. Yeah, but that's the point now. When you increase the price,
when I do that, doesn't that cause inflation? Isn't that counterintuitive to what is supposed
no,
to do?
because you've reduced demand. Nobody's going to buy your gala.
I reduce demand. I reduce supply.
No, I'm talking about you reduce the demand on the field. The guy buying your gala can't buy your gala again. You reduce your supply because you increase the price. So the guys that are buying can't buy your gala anymore. So because they can't buy your gala, you've reduced the demand. That's what they're trying to do with the monetary policy. So, okay. Let's not argue the textbook all over again.
Look at the MPR from investment perspective. Look at the MPR. When you see rates go up naturally, you are making that your market more attractive, non-asset, because the benchmark rate reflects on all other rates in the on the financial sector. So savings, cost of borrowing, it has a reflection. That is why when rates go up, usually the currency appreciates. So you are just looking to see what the Apex Bank is doing, because you've forgotten that the problem why our CRR is still at 32%, why a lot of people are clamoring for it to go at 10%, is that they understand that the amount of liquidity in the system is high through ways and means and other
which they printed
that has not yet gone out of the market. So what you do is you either make the demand for your currency much more attractive, and that's why foreign investors are saying, see, your rates even have to be higher than inflation. And that was why I was happy that the Apex Bank did not follow the direction of the president, because what the president wanted was lower rates to fuel consumption, which you are also planning for. But at the same time, you have spoiled the market,
which is what Turkey is doing. That's what Turkey is trying to do.
That's I see your point, right? That when you increase NPR, it makes your currency more attractive, people bringing more money. But that will matter more for FPIs than FDIs, and I really think FPIs are dangerous.
Man, we're going to a rabbit hole. We got to move on.
But that's the best thing, right? We have to separate these things.
No, we're going to a rabbit hole. We got to move on. Let's move on. The point is really simple, right? If you go to a bank,
Please, if you can, let's talk about the money thing. My first question: Are we doubting that the policy that they've done is
nothing
wrong?
is wrong with the policy? I support the policy 110%. I support the policy of removal of the subsidy on petroleum and the removal and the devaluation of currency. I support it 110%. I've tweeted it. I will continue to support it. It's the best policy to do. The problem is the implementation by the executive. I see folks on Twitter posting tweets and saying, listen, a policy can be good and the implementation can be horrible. That's what we've done today. We've got a good policy to devalue, a good policy to remove the corruption in the deregulation of PMS and the devaluation of the currency. But you've implemented it wrong. You've done it wrong. That's the problem. You've done it wrong. So go back and fix it and stop saying it's. We are not the guys.
Can you understand how it was done wrong? Thank you.
First of all, can you show me any policy document that showed where PMS was deregulated? Let's start from there. Show me any policy document in Nigeria that says we've deregulated PMS. Let's start from there. Show me one that shows him. Let's see one. Number two, you had a CBN governor last week say the policy was not to, what's the word again? To align the rates of the parallel market with the CBN rate. So what are we doing? This is central bank governor saying that what we've been doing for 2 weeks was not to achieve the result that we were told 2 weeks ago. The CBN governor. So what are you asking me? His own words. I didn't do any policy. Before they did this policy, I said you must devalue the currency and you must remove the subsidy. It's there on Twitter. It's right there. They did it wrong. They should have removed the subsidy on petroleum and immediately announced palliatives so that the impact on Nigerian households is not as severe as it is. So that you avoid the loss of consumption. That's number one thing they did wrong. Number two, on the devaluation, they have not communicated. You devalue, but you still have 44 items still on the list as banned. Why do you still have 44 items banned if you've devalued? Why are the banks not allowing crypto to flow in? Why haven't you devalued sufficiently to attract all the diaspora funds back into your country? That's what they've done wrong. Not me, they. It's their policy. Does that answer your question, sir? All right, let's get Biyaminu Yakubu.
All right, good evening. Oh, thank you, Mr. Kalu. I think I agree with this your last submission, because to get these things right, I think implementation was an issue, because when you want to get things right, there's what you call conditional convergence, and that's what we are going to work towards to get some things done. And when you have restriction on capital mobility, it becomes an issue. Those restrictions, I agree with you. I've been looking at it. Those 40 items, they actually need to look at them. When you say you're actually allowing to float, then allow people to source their dollar and let people get it, but don't put restriction to that. I absolutely agree. That's 100%. And secondly, I think Mr. Adesso, another thing is Mr. Kalu talked about reducing demand. It actually reduced demand because the alternative for gone. People have money you want to spend because the rates are high. You want to save or to invest, place them, and then make a bit more money. And that will reduce your, if you do the income savings and the consumption. You see, one, that the savings will go up. When savings goes up, you have your income is static. The consumption will most surely come down, and that reduces demand. That one is sure it's going to happen. And I think why I even requested the mic, Mr. Kalu made mention of Kemi Adeosun's policy.
Sorry, can I just counter that?
We're winding down. We're going to wind down at the top of the hour. So after he speaks, I'm going to illuminate, come in and just say his brief closing, and we're going to round up at the end of the hour. If there's time, if you can keep it short, I can let you speak, and you can speak. Then we're going to round up by the end of the hour. So if you can keep it short, sir. Bianmi, go ahead, please.
All right. I said one thing Adeosun did, not only going to be cheap for the government, but she actually tried to solve the issue of crowding out effect. Because as at then, crowding out effect then, because the private sector are competing with the government within the local market.
Good
and
point.
I think she tried to raise a bit up, then reach as at then. When she did that, rate came down a bit for the private sector. In fact, that was when most of them started playing within the bond market, really the private sector. They actually started playing well. I think if I could remember that time, UBA did an issue with the FMDQ and the likes of them like that. It actually helped some of them, the people that knew what they were doing. And another thing, issue of Nestle. I think people were talking, I think if I go to office tomorrow, I need to look at it, because I know some of these things, more especially Nestle and DSTV. this issue of transfer pricing is a key to them. They've been doing this thing, and they reduce their tax, the amount they pay as tax to this country. They've been doing this thing, not now, not before now. They've been doing that because what they do, they take things from, like you said, from their related or parent company, come in, price it at a higher price that it's actually you should get as a person, and then you reduce their bottom line, and then they pay lower tax. They've been doing that. I think that was at the point.
We're gonna round up. I think you're you're over the target there, but I don't think we have to. You're spot on.
Okay.
Amount of time. Olumide,
thank you very much.
You're very welcome, sir. Olumide, let me just ask you to give a quick close, and then I'll round it up.
Yeah, so interesting conversation, and I think for me, the result shows that the Nigerian economy is facing the reality that there's still a lot of structural issues, and we also need to understand that I think very little CFOs will be able to manage a 40% currency drop in the month of March.